A little bit, why to listen to us here today. The marketing, this was important to me. I made sure that we sent out, the reason you guys registered. One, I'm asking you to spend 2 hours with us. I know that's a little longer than normal, but, most of you are spending 2+ hours a day on your trading. All of us can learn something. All of us can do better in our trading, me included. I mean, I'm always looking to learn things because I do not trade with 100% success. I know I never will. So any incremental improvement I can find in my trading is always well worth the time. So I wanted to make sure that we've got really good content in here, which we do. Certainly I'm going to tell you about the Premier Trader University and the opportunity there, but there's a lot of great education in here. And then we also want to reward you for spending the time with us, and we'll show you how to get kind of the prize or the reward, which is really this training on a USB thumb drive that we'll send you. So we'll do that at the very end, kind of as the reward for sticking with us during the training. So what we're going to cover today, the 3 main topics are going to be, number 1, which I'll present, the hottest and potentially most lucrative markets this year and beyond. Mike Rixey will come in and present to you on the lost and forgotten opportunities in the markets that will really make you want to take a second look. And I actually think this is kind of the thing that's going to explode on us. So, and it used to be the hot thing to trade, so it's really interesting. And number 3, I'll come back on and I'm going to talk about really growing and scaling the trading business, really I think faster than any business opportunity on the planet. We'll talk about an introduction to the Premier Trader University and how to get your free USB flash drive and all the resources, plus a Q&A as well. So we already mentioned the free flash drive. Ooh, that's really nice. It's really cool looking. So you guys will get this as our way of saying thanks for listening to us, learning what we have to share with you today. We've also put some really cool stuff on it so you can use it as well as learn from it. We've got resources, tutorials, education, to really take what we're talking about today and move it further. Just stay to the end of the presentation. That's the only catch that you've got, and I'll go ahead and show you how you can get that. And we'll give you the special link to that. 1 per household, blah, blah, blah. We'll talk all about that later, but no big deal. All right, most of you guys know who we are. I'm in the top left. Brian, you heard from the beginning, top right. You've got Mike Rixey down in the bottom left. This is like the Brady Bunch shot here. And there's this is the whole team that helps us support the Premier Trader University. We have other people on the team as well. My apologies to them if their face isn't on here, but this is the main team that's supporting the PTU education. All right, so let's jump right in and talk about the hottest and potentially most lucrative markets in 2012 and beyond. And it really may not be what you think, especially based upon the survey answers that I just saw. Now, for those of you new to trading or maybe wanting to get back into it or maybe just needing a little motivation, maybe things haven't gone that great, why should you pursue trading? Remind yourself of these things. The opportunity really is limitless. There are billions of shares, contracts, pairs traded daily, every single day, day in and day out. You really can get started with a minimal of capital, more than what you typically see out there in the marketing fluff world. I mean, I'm going to be realistic with startup capital when we get to that part. Nevertheless, compared to any other business out there, it's pretty amazing what you can actually start a real credible growing business with. You can very much control your leverage. You guys, 40% of you understood that risk was really critical, controlling the risk and reward. You know what? No employees, limited overhead. I mean, that's all great stuff because trading doesn't, guarantee you the fixed same amount every single day. What business does? So it's really nice that you can control your overhead. In the third topic we covered today, we're going to talk a lot about the P&L and overhead, and you're going to see why it's so nice not to have the employee line. You definitely can decide your own schedule, your own hours. There's just so many different opportunities available to you. If you want to be a part-timer, a full-timer, it's great flexibility. And if you do it right, this can really be your profession, your business. If you have other passions, this can be a great complement to those other passions. So I think it really comes down to choosing between day trading or swing trading. Most of you, when we ask that question, are doing day or swing. Very few of you identified yourselves as a position trader. One, because position trader has been so damaged, right? Over the last decade, it's been pretty much a failure. It just doesn't work. So you have to be more of an active trader these days. I see no change upcoming in that way. It's very hard to buy and hold anything. So you've got lots of really cool opportunities in futures. I think most of you are familiar with what futures are, but basically you're buying a contract. They move based upon how the stock indexes move. When the indexes go up, they go up. When they go down, they go down. Energy, crude oil, natural gas, metals is things like gold and silver, copper. Agricultural, think wheat, soybeans, corn. Interest rate, pretty straightforward, 10-year notes, 5-year notes. My Forex people, you guys know Forex pairs, the euro US dollar, the pound US dollar, the Aussie US dollar, the pound yen, etc. And then stock ETFs and options, you've got a gazillion choices, but as it turns out, there's really a nice small subset of the best choices overall. But the first thing you got to do is you got to determine a little bit, hey, do I want to be a day trader or do I want to be a swing trader? So let's talk a little bit about what is working best right now. And I feel if you want to day trade, you should think futures, not Forex. And I know that might be contrary to what some or a lot of you are doing or thinking, but you have to understand that we work with thousands of traders around the world. I get to see into all kinds of people's accounts, their experiences, their successes, their failures, and really what we're seeing, the best opportunities if you want to choose day trading is going to come from futures and not from Forex. I believe if you want to swing trade, however, absolutely Forex, great opportunities, and stock ETFs and options, which you're going to find out about from Mike here in a little bit, why that is such a brilliant opportunity for all of you overall. So let's talk a little bit about day trading and the futures. Why do I think Forex day trading is flawed? I mean, it's kind of strange to say that because I know it's the easiest thing for us to say that, oh, it's amazing, it's get rich quick. You know, that's what a lot of people want to hear. I realize 60% of you are trading Forex. But in my 17 years in the business, I can tell you honestly, point blank, I know a lot more people profiting day trading futures than I know strictly just day trading Forex. Okay, that's probably the biggest statement I can tell you. It's just the reality of all of our experiences here at NetPicks and literally working with more people than you can believe. Okay, why is that the case? I mean, you got to scratch your head because we've all been sold that, you know, Forex is the most amazing thing. So I've got some of the reasons that I've identified that you may be experiencing that I think is really impacting your results. I think on the charts, I think Forex looks amazing. The problem is we just don't see a lot of people getting the chart results in their accounts. And if you've traded Forex and you try to day trade, some of the reasons on the screen you're probably very familiar with, maybe kind of unhappily so. Number one, you've got lack of centralized trading. There's no central clearing firm. I hate that. I now have to trust my broker to set the market, set the prices, and how many times at NetPicks do we get complaints from people, not to us, but them saying, geez, I never saw that setup. I never got filled at that target. I got stopped out. The other guy didn't, because there is no one place you can look which has all the executions. You are literally having to trust your broker for everything. Do you really want to trust your broker for everything? You know what? I mean, they do a job for us, but I certainly don't. There's been a lot of things in the news lately that certainly are going to make you, think more than once or twice over that. The commissions are way too high. They always say there's no commissions, but there is commissions, and we're going to talk about why this is a problem. The fixed spreads are really a problem when it comes to day trading. First of all, you can't trade most of the currency pairs out there because the spreads are too wide. There's a few markets where they're not, but don't think for a minute the spreads you're seeing are really, truly exactly where the market's at. They are manipulated, they are moved, and they're a little bit off the market. The other thing a lot of people have is just trying to execute. I call it the deep freeze. Your platform freezes, the market freezes, news comes out. Geez, you can never execute the darn thing. I had a trade today in futures that I got in and out in 7 seconds in a fast-moving market. I'm going to tell you that's just not going to happen in Forex. Something's going to freeze. Something's not going to execute. They're going to arbitrarily widen the spreads. You all know this. They tell you, oh, it's 1 to 2 pips in most market conditions. Oh, except for the good ones where there's easy profits. Then the spread's 12 pips, 20 pips, or you can't even execute. And you cannot day trade without liquidity. If your liquidity is not assured, you should not be day trading that markets. And you'd be surprised, Forex day trading, I find, is actually a heck of a lot slower than futures. I can get in and done on futures much quicker on most days than I can ever do it on Forex. Now, a lot of people then think, well, that's all well and good, but I don't think there's enough liquidity in future because I'm always hearing this $2 trillion a day changes hands in Forex. $3 trillion a day, depending upon where you look. Well, I'm going to tell you that the stats are pretty darn impressive in the little old futures market too. S&P Mini, $180 billion changes hands each day in contract value per day, just based upon an average day. Crude oil, $53 billion. Gold, $26 billion. Even corn, $1.5 billion. So there are big-time dollar amounts trading here. Liquidity will never be an issue. I mean, look at those daily volumes. We only need to trade one, or maybe two if you want to double your business, or three if you want to triple it. So if there's 2.6 million contracts being traded a day, yeah, there's enough liquidity. I think you would all agree with that. Now, another thing that comes up is people think, oh, Forex has got 50 to 1 leverage, 100 to 1, 200 to 1 back in the good old days. Number one, if you use 50 to 1 or 100 to 1 or 200 to 1, it's turned into gambling, and you will wipe out your account multiple times, and you're playing a game. This isn't about playing a game. This is about running a business. But I'm here to tell you there still is tremendous leverage in the futures markets. 10 to 1, literally up to 90 to 1. You can see here on the full margin column what a broker typically requires that you have in your account to trade one of these contracts. And this is not day trading margin. Day trading margin might be a quarter of what you see, but I'm not a believer in that at all. We'll talk about that later. But even at a full, overnight maintenance margin, you can see how much dollar amounts you really control. Pretty impressive. The margins are really good. You don't need to use anywhere near this much leverage. So I'm here to tell you again, don't feel that futures doesn't provide the leverage you need. In addition, futures trading is never a gamble. Now, in fairness, I'm going to say if you use Premier Trader University, and we do have Forex day trading plans, they always are not entering the market as a gamble. But sometimes, again, people think, well, I'm not sure. It still feels like a gamble to me. I'm trading these contracts on future pricing. You can see here, Russell E-mini, I knew exactly where I was getting in, and always I knew exactly where I was going to get out if the trade did not go my way. This is never a gamble when we trade the way we do at PTU. There's always structure. I talk about this a lot. It's really important to know, right? A bunch of you identified that entry is important, I think 18%, and 17% said, you know what, the exit is important. 1 out of 3, besides risk, said that those are critical. So almost 80% between risk, entry, and exit. Well, on PTU, anything that we do, we've always got the risk taken care of, we've got the entry taken care of, we've got the targets taken care of. That is really critical when you trade. This is definitely something you can do, and you know what, there's plenty of leverage. This is a $590 move in less than a half an hour. You don't need a gazillion dollars to control a contract of crude oil. I already showed you in just a couple slides ago that it doesn't take that much, right? Even on full maintenance, $6,800. I mean, that's almost a 10% move in 30 minutes based upon this margin. Now, I'm going to tell you later on that I'm going to ask you to have more margin than that. But still, it's pretty neat to see that anything that you thought about leverage or liquidity goes away. Costs are great. They're kept to a minimum. In the Russell E-mini, you may pay $5 for commissions. You may have no slippage. You may have maybe a tick at most. So that works out to be anywhere from $5 to $15 in costs. Well, if you're going for an average target of $400, let's say in a particular trade plan, that's only 1.2 to 3.7%, of that contract value. It's quite small. It's a small part overall. S&P Mini, just as compelling. Crude oil futures, just as compelling. Gold futures, same story. The problem I run into in Forex are these fixed spreads, maybe 2 or 3 pips. A good target in Forex on a day trade could be 20 pips. That's 10 to 15% of the target, and that's assuming that that spread and where the broker is trading the market for you at that time is really realistic compared to the actual bank prices. It's probably actually not. So you can see that costs are minimal, controllable, and a very small percentage. That's important because, again, it may look great on the chart, but if you have all kinds of problems executing and getting the results in your account, well, then you don't have those results, right? Now you have so many great choices. Again, I've got people in here from Australia, from New Zealand, from Asia, from the UK, from the US, Canada, Mexico. You've got choices based upon anywhere you're located in the world. You have leverage choices, account sizes, volatility, day or night. stock futures, energy, metals, agriculture, yes, even foreign currency. Thankfully, centralized pricing for the euro you can trade. So no longer do you have to trust, your individual broker. You actually have real exchange-based trading in the euro, the pound, the Aussie, the Canadian, etc., and interest rate futures as well. U.S. market hours, European market hours. So this is a global opportunity. And we've made sure with the PTU that we have trade plans in every single category because we know some of you can trade U.S. hours, some of you can trade European hours, and so on. Not everybody can do the same things. We all have very different account sizes, so we have to have flexibility. Now, I always say if you can just get 10 to 25% of the daily range, use that as your typical target. Really in any system, this is very achievable. So if the range in the S&P Mini is about $1,000 based upon current 21 points a day, 10% is $100 up to $250. If you're familiar with the way that the S&P works at $50 per point, that's 2 to 5 points. That is going to be the heart and soul of what a day trader is going to go for on that market. I mean, think about crude oil. If I'm telling you it's $2,200, well, 10% is $220. That's about 22 cents in crude oil. If you've traded crude oil, you know that's a really achievable number multiple times per day. Even 25%, if it's $500, 50 cents, very achievable. We have a trade plan right now that's going for about 56 to 58 cents on an individual day trade. That's all you need per contract. We can scale, which we'll talk about later on, with more contracts. I don't have to get, $1,000 on my move. People get, in a way, a little greedy when they day trade. So think 10 to 25% of the daily range. In addition, this is not a marathon. This is not a sprint. I'm here to tell you that the more time you spend in the markets trading, the less money you are going to make. I know that's contrary to what a lot of people think. It was contrary to what I thought. I used to think if I would just trade 7, 8 hours a day, I would run the math, I'd run the numbers, I'd run the spreadsheets. That's where all the money was. And anytime I went and tried to do that real time, I did terrible. The reverse is also true. A lot of people think that they can scalp their way to riches. Go for 1 tick, 2 ticks. I'm here to tell you the costs are too high. You will make mistakes, the commissions, the slippage, the noise, the speed. It just rarely works. There are certainly systems out there that people on Wall Street have spent millions and millions of dollars developing that can scalp. Different story. We're not all in that situation, right? We're off the floor, at home, at our office trying to trade. Don't turn this into a marathon. Don't turn this into a sprint. Look for those trades that take the 10 to 25% of the daily trading range. You are going to be in perfect position if you do just that, and actually smarter than most traders heading into it. And I'm going to talk a little bit about how you do that in a moment using something called the average true range. Now, is there a secret formula to trading? Yes, there actually is, but it's typically not what people want. People typically want the thing where it's some, crazy mathematical thing, and you hear these stupid stories that you get on the internet or in your email about some old man who taught somebody, his dying wish was to teach this young man his system, and he became rich. I can't tell you how many times I've heard the same stories. But it's really, truly this formula. You have to have a trading system that always puts the odds in your favor. It doesn't mean it's going to be successful every time, but the odds are in your favor. You also need to have great training to execute upon that system, because if we just gave you a system, you will fail at it. It's just the way that it works. You have to know a lot about all the nuances that go into trading. You also have to have starting capital so you can afford your chosen market. Again, we're starting to get into that risk side a little bit. A lot of people won't even know it. I've got people on listening right now who probably failed in their trading and actually would have succeeded because you probably traded a decent system maybe in the past, but you didn't handle the risk right. You didn't handle the starting markets right. And I think you only need 1 to 2 hours to trade. That's all you need per day. That's it. And you know what? A lot of days can be less. I had a 7-second trade today. That's kind of crazy. That's not the expectation every day. But it can happen. I mean, it's not unusual for me to be done in a market in 15 minutes, 20 minutes, 30 minutes, but I have to be prepared to go the distance because not every day is that rewarding or that quick. And you have to have discipline, patience, and tools of the trade. That is the Holy Grail formula. These are the things that will make up a successful trader, and honestly, nothing else out there will. And that's always the focus with PTU. We've kind of realized it can't just be system. We've got to have all the training elements in there as well to ensure success. Now, what do you need to start trading futures on a day trade basis? I tell people $5,000 or more. I know your broker will probably tell you $1,000 or more. And you know what? I can't force anybody to, take our recommendations on starting capital, but this is really where you typically should start because, the broker, they're in business, and it's fine. I have no problem with this. To get you in, to get you started, to get you trading. It's not really their concern if you do things right or wrong. They'd like you to stay around, and that's how they make commissions over time. But they realize the reality is the more aggressive they can be on leverage, the more likely you're going to come in, and they're going to be able to attract a lot of the biz opportunity people and the get-rich-quick crowd. There's a lot more of those, but you guys are not that. You're going to be smart about your trading. This also enables you to use max risk 2 to 3%, and I'd like to get that number lower for all of you over time. As your account grows, you need to be under 1%. But I realize in the beginning that's not practical for a lot of people. But even at $5,000, we can find markets that we can trade with 2% risk and certainly up to 3% risk on a trade. And then, like I mentioned, we want to push that lower over time. Here's an example of a Dow E-mini trade on the PTU. Again, I want to stress I knew exactly where I was getting in. I knew already on this trade plan that my average loss was going to be $138. That's the average. Some are less, some are a little bit more. So I immediately know, hey, I can trade this on a $5,000 account, keep that risk under 3%, even on the averages, and have safety. The third topic we're going to be talking about a little bit later, you're going to want to stay around for because I'm going to show you just how dramatically losing trades factors into determining what you should be responsibly trading. Now, swing trading is huge. I think there's a great opportunity in swing trading. I think Forex is a perfect choice for swing traders, and stock and options are amazing. You're going to learn about that in just a few moments from Mike. You just need 15 to 30 minutes a day. You don't need to monitor every tick. It can be a heck of a lot less stressful. You can definitely trade from anywhere in the world. You've got a few cautions. You're going to have overnight exposure that you don't have with day trading. Your trades are going to be on over a lot longer stretch of time, and you need to have some patience. You can look at a chart and go, oh, I could do that. But trust me, sometimes when you're waiting a day or 2 or 3 days for a trade, your patience is going to be tested. But there's a lot of things that make swing trading easier. 24 hours a day can be completely manageable through some of the things that we teach. One is called snapshot trading. I don't want somebody staring at the screen 24 hours a day. I want you to spend a few minutes here and there, take a snapshot, do your action, move on. If you missed an entry, we have something called getting in sync. So many opportunities to get in sync with trades that have already executed. And trade zones, I'm here to tell you a good part of the trading day and night is worthless. It's garbage. I want you to focus on the times of day or night that provide the best trading opportunities. So we've made sure with our PTU Forex swing trade plans that we incorporate all of these, because what I don't want is somebody to have to sit here and stare at a 4-hour chart, and here's a 4-hour chart of the Euro Aussie, and have to be around for every single setup day in and day out. That's just not a way to live. I have the little tropical paradise there because I want to remind all of you, you need to focus that way. You do not, want to trade in a way that you couldn't be, sitting out there by the pool. You honestly can in this, but you could not if you were day trading. That's the beauty of swing trading. A day trader is not going to probably sit at the pool. It's stereotypical. You've seen the image in marketing. You're going to be at your desk. You're going to be staring at the screen. A swing trader does not have to do that. These trades take several days. Most of the trades here that you're looking at on the screen took 1 to 3 days. Plenty of time to act, to make changes, to manage the trades. Now, let's go through a few more secrets I want to give you guys on the educational side. If I can tell you one thing, if you want to day trade, don't day trade with time interval bars. 1 minute, 2 minute, 3 minute, 5 minute, 15 minute. For the most part, they're way too slow to respond to fast markets. They're way too fast to plot in slow markets. I'm a huge believer in what we teach, which are called range bars or tick bars. There's things called Renko bars, anything to get off of the stereotypical time intervals. However, you got to be careful because if you use range bars, your results will fail over time if you use what I call frozen range bars. I had this problem about a year ago when I was using range bars. I was killing it. Actually, August of last year at this time. And somewhere in September, my same systems, my same results started to really fall off a cliff. And the reason was I was too locked in on the size of my range bars. And I want to show you something why the reason is. So look at the first line on the S&P Mini. In January, it was averaging about 20 points a day. In April, about 15 points a day. In July, back to 21. Well, look at the Dow, 190 points a day in January, almost cut in half. Just a few months later, 118, and here we are in July. We're almost back to where we were in January. But if you took 25% of the range, look at the variance from 29 points to 48 points. Well, what if back in January I told you my target was 48 points? How do you think that would have worked in April? Pretty crappy. Because now I suddenly almost need to go 50% of the range to get my target. I can tell you as a day trader, that ain't going to work. It's going to work on a few days that run, but most days do not run. Most days go up and down. So this is what happened to me. I was trading like January conditions and using targets based on January conditions, and suddenly I was in a month like April where the ranges went down a lot and my trades were working and never actually reaching target. That's no fun. So you have to be able to be dynamic about what you trade. And the solution really is we take percentages of the average true range. That's what we teach people in the PTU, and this was the aha moment. This is what turned it all around for me personally, and this is what made range bars just so incredibly dynamic, the way that market conditions change. And if you think the changes here are big, this year they're nothing. If I went back a few years, I could show you times that the Dow was twice what it is today and times that it was 25% of what it is today. So that's why this is so critical. Another huge thing is trade zones and dead zones. I'm going to give you these on the stock indexes in the U.S., the energy futures, the metal futures, and the European stock futures. These times here are all New York. These times, I'm guaranteeing you, has 80% plus of the profit opportunities. If you just focused on these times, you'd be in, you'd be set, and this is the way we develop our trade plans, okay? You do not need to trade the whole day. You do not need to trade the overnight. You don't need to trade the pre-opening. Look at these plans, 90 minutes, 90 minutes. Yeah, one stretches for 3 hours. Okay, granted, sometimes you have to, but I'm giving you the entire window of what I think could or should be traded. Okay, so that's it. The rest of the time I consider the dead zone. Yes, there's some afternoon trading that can work. We have some trade plans that work in the afternoon, but I'm going to be honest, they're not as good as the morning plans. They're not as good as the ones you see here. They're decent, but they're not as good. This is one of the keys, focusing on these specific times. Another specific key is we teach power of quitting. And I did say quitting. Quitting is always this negative thing. We teach people in most of our plans to do something we call POQ1, which means one winning trade plus positive results, you quit. Stop right there, walk away. Now, if the first trade loses and the second trade wins, I don't quit yet unless I'm positive. But I absolutely do quit in the circuit breaker of time. So we have a few different things working here. And look at these results on a few plans over a little stretch of time. The Dow Mini on POQ1 made $4,800, averaging $41 per trade per contract. When I pushed it and tried to get two winners, my profits got cut in half. The marathon doesn't work, right? Crude oil, what happened? Well, my profits didn't go down very much, but look at my average winner. It got cut by 50%, but I put in twice the amount of time, by the way, to do POQ2. DAX futures, it went up. My profits went up. However, my average trade winner went down, and I just doubled my time. Is it worth it? All that extra stress, time, cost, slippage, commissions? Hell no. Silver, is it worth the extra $2,000? You know what? I could trade two contracts and double POQ1 and spend half the time trading one contract, POQ2. This is something for some of you, if you're new to us, this is going to make a huge difference in your trading. You also need to be really realistic in your expectations and your drawdowns. This is from a CTA report, professional traders. They're trading huge accounts. We really have a huge advantage as retail traders. Trust me, we don't have to trade $100 million at a shot. I don't have to hold the futures overnight. But I want to show you, even huge accounts can have big-time monthly returns. But this number one account that made 46% in June, they did have to endure a 30% drawdown at some point during the year. Markets are not consistent in one direction. They chop up and down. You need to understand that. As I go to year-to-date, you'll notice that 40% turns to an entire year 79%. Again, it's not predictable that you can make a fixed dollar amount or percentage every month. And the drawdowns still factor into this. And I'm going to talk about this in a lot more detail in a later portion of this training. But you have to go into this being realistic. Now, the cool thing about being a retail trader that I love is I don't have to deploy $100 million. I don't have to hold things overnight. I'm never worrying about how am I going to execute 50 contracts like a fund is going to have to worry about. It'd be very difficult to execute 50 contracts of any market except maybe S&P Mini without any issues or slippage. As a retail trader, 1, 2, 3 contracts, piece of cake. In and out, nobody even sees you. Very different story. So you've got a lot of great advantages. Like we always say, success is not where you enter. Do you know what's going to have most of the impact between success and failure? Your targets and stops, your risk management, your ability to handle the order management system. Trust me, that's huge. Speed of execution, eliminating mistakes. You're going to make a ton of them. Even to this day, on occasion, I hate to admit it, I do. Your ability to adhere to the trade plan, your ability to survive drawdowns, your ability to scale and downsides. This is the difference maker. It's not getting in at the right place. That's one element. It's one of the smallest elements. All these other factors will determine success and failure. They've already determined for all of you guys whether you're making money or not. I'm sure most of you would agree that, you know what, those are the things that have gotten me into trouble. That's why so much of our focus when we train surprises people. We get through the entry. I can get through the entry in our systems in 5 minutes or 10 minutes, honestly. Everything else is what takes the time. So the things to remember, don't trade like the crowd. Trade differently. If you're doing what everybody else is doing, if you're the sheep, and it's not going to work out for you, you're going to fall off the cliff. We do a lot of things very, very different at NetPicks and the PTU. Some of the things that I've told you today, you may even initially disagree with because it's not what you've seen and not what you've been taught. But the best traders can profit in all market conditions and not follow the herd and not follow the crowd. So what I want to do now is I want to go ahead and hand the presentation of Mike off to Mike. And let him kind of open your eyes to pretty amazing opportunities. And I'm going to let Mike do that. I'm not going to steal his thunder. So Mike, I just handed it off to you. So you're up.
All right, thank you, Mark. If you could just let me know, is my presentation showing on the screen?
Right now I see your workspace, your Windows workspace with the PDFs and all that sort of thing.
How about now?
Now I see it.
Perfect. Just had to switch over to the other screen. All right, so as Mark said, my name is Mike Rixey. I'm part of the faculty at Premier Trader University. And what I want to talk about today is the power of options trading. Before I get into it, everything that Mark just said is just, I can't stress how important that stuff is. When we start talking about risk management and identifying the best times of day to trade, using the correct chart setups, that's what's important. I can teach you guys a system, a successful system, in a very short amount of time. But if you don't have that other stuff mastered, you're never going to find the consistency that you're looking for. So definitely pay attention to what Mark just said. Go back and review it just to make sure you have some of those points covered in your trade plans. All right, so transitioning over to options. The title of my presentation, The Lost and Forgotten Opportunities in Stocks and Options Trading. From our poll earlier, I was really happy to see, honestly, 36% of you trading options. I know it doesn't seem like a big number, but that number has started to creep back up. For whatever reason, people just tend to forget about options. They've had bad experiences in the past. A lot of people just tend to lean towards the futures and the Forex markets. And those are great markets, don't get me wrong. But as you're going to see here today, there's a lot of great profit potential in the world of options. So let's go ahead and jump in. Let's talk about some of the reasons why I like trading options. Number one, the versatility. You can use options in so many different ways. I can use options to benefit from a bullish market, a bearish market, and a sideways moving market. There is no other product out there that you can say that about. For those of you that are trading futures and Forex, I would ask you, can you make profits in a sideways moving market? No, that's really what we all battle on a day trading basis. A sideways choppy market is our worst fear. But when you're trading stock and options, specifically options, there are definitely strategies that you can use that actually benefit from a sideways moving market. If you look at the overall equity markets so far this summer. Have we really made much ground up? I mean, really, if you take a look at the overview charts, we've just been chopping around. Okay, we've been in tight ranges. You know, they're pretty ugly looking charts. But when I talk to a lot of people that trade options, a lot of the traders that I communicate with on a regular basis, they're just making great money right now because it's perfect for some of the option strategies that are available. Next, the popularity. We just got done talking about how that percentage of traders is starting to creep back up, the traders that are looking at options, which I love. I love to see that. And it shows in some of the other numbers as well. I just looked at a statistic last night on Twitter. Somebody posted about volumes in July this year compared to last year, and volumes are pretty much up across the board in the option markets. If you compare that to what we've seen in some of the futures markets and some of the trading activity that we've seen in the Forex markets, we've really been all over the place. On some of the Forex or the futures markets that I trade, we've seen a lot of low volumes, seen a lot of chop. So I really think that over the next, I'm going to say, year or two, options are really going to explode. I think there's a lot of great profit potential there, so it's definitely worth your while to look into these products. Next, the leverage. Every product that we talked about here today, Forex, futures, and now options, they all offer great leverage for the retail trader. Okay, let's face it, most of us, compared to some of the big professional hedge funds, we have smaller account sizes. I know a lot of retail traders start in that 5,000 to 10,000 range. So we have to use products that give us that leverage. Okay, when we talk about options, I'm going to show you some strategies that you can use to control 100 shares of a $600 stock with as little as $1,000, $2,000. It really gives us, as a small guy, the opportunity to play with the big dogs. So that's really why I love to trade options. Next, the strategies can be used across so many different markets. With the strategies that we're going to talk about as part of PTU, you can use them on stocks, you can use them on ETFs, you can use them on index products. There's futures markets that have options available on them. There's so many different ways that you can use them. So if you take the time to learn some of the basic option strategies, you can use them across many different markets. It really opens up the door for so many opportunities. And lastly, they're a great product to diversify with. I've been trading for about 10 years now. I actually got my start trading options. But what I saw was, over time, my equity curve was all over the place. Yes, I made money, but along the way, I definitely had drawdowns. And I got frustrated during those times of drawdown because there wasn't anything else for me to do. Where I saw the consistent growth in my account really kick in is when I added the futures trading to the mix. So now all of a sudden I'm day trading the futures markets while also having some swing trades on with options. And that's where I saw the consistency kick in, because I'm not going to say it never happens, but it's pretty rare that both types of trading hit a drawdown at the same time. For example, the last week and a half for me trading crude oil futures, it's been slower. Really just kind of spinning my wheels with the approach that I use. Now, in defense of crude oil, it just came off of an amazing stretch where we made a ton of money. So, and the slowdown was to be expected. But during that same week and a half where we've just been shopping around, my options trading has been amazing. I'm going to walk you through a recent trade that I just closed, the balance of the trade here this morning. Just some amazing profits, 100% returns in just a few days. So that's why I love the combination. I love the diversification. If we can mix in some day trading with some swing trading, I really think that's where you're going to see the success kick in. Okay, one of the complaints that I hear from a lot of retail traders is they shy away from options, number one, because they don't understand them. They just seem overly complex. If you're going to trade the futures or Forex markets, really all you need to be concerned with is buying or selling those futures contracts. However, in the options world, it's almost like learning a different language is what I hear from a lot of traders, because they try to jump in the deep end and they don't learn the basics first. I can tell you that there's a lot of basic option strategies that you can use that you can make great profits with. Okay. The second complaint that I hear is there's literally thousands of different products out there that have options available on them. How do you know which markets to trade? If you're trading the futures market, you really have only a handful of markets that are worthwhile trading. But when you look at stock and options, if you're looking at hundreds or even thousands of different stocks, it can be overwhelming. So how do you narrow that list down? Well, number one, I want to narrow the list down to a very small universe of stocks. I don't want to be concerned with stocks that have low volume, that have choppy price action. What I want to do is try to create a diversified list of stocks that cover different sectors. Okay, I don't want you, if you can only trade 2 to 3 names, if you're trading a smaller account size, I don't want you trading Apple, Google, and Amazon. They're way too correlated. I want you to try to avoid that. So what I'd rather see you do, cover some of the different sectors. I've listed some of the main sectors here that people track. We've got tech, energy, financial, index, retail, and commodity. Try to get a mix of those products. Okay, I don't want you to sit there and look at every sector and say, okay, I need 2 or 3 names inside of every sector. It's not necessary. Next, get a good mix of stocks and ETFs. I personally love trading individual equities. When I take a look at my overall performance, a lot of my home run trades are going to be on individual names. However, there's certain ETFs out there that also have great price action, very liquid options. I love trading those because they give me an easy way to diversify. For example, if I need a name inside of an energy sector, instead of going in and testing dozens of different names, I can go ahead and look at an energy sector or an energy ETF that covers the whole sector. It gives me an easy way to get that diversification. All right, so what are the tools to initially find those names? Well, there's a number of different scanning tools available on the internet. You can use different charting platforms depending on what tools you have available as part of your trading. I like to use TradeStation for my charting, and inside of TradeStation they have hot lists. And I have a picture of a hot list here a couple slides later. Basically what this list does, it's scanning, looking for the names with the most active options. Okay, so this is just taking a look at the overall volume of options traded. It's going to show me the most active names. Now, you can take a look at the top 50 if you want. I don't want you to trade 50 names. I don't even want you to look at 50 names. It's not necessary. You can go through this list and try to find a very small list of names that you can trade consistently. If I were to show you my actual watch list, my trade list that I look at every day, you're going to find every one of those names on a scan like this, looking at the most actively traded options. So a very powerful tool for those of you that do have access to TradeStation, just an easy way to identify the best trading candidates. And like I mentioned, you don't want to trade too many names. I'm going to talk here in a bit about my daily routine. The only way that I can keep this simple is by looking at a small universe of names. I want to know those names inside and out. I don't want to overcomplicate things. All right, here's a sample watch list that I put together. Now, I'm not saying these are the most profitable names or the best names. It's a list that's it's pretty diversified. We've got a lot of good mix here of individual equities, ETFs, different sectors. This is a great place to start. I've seen a lot of great results. A number of these names, we're seeing winning percentages in the 65 on up to 80% rate going back to the first of the year. Okay, so a lot of great performance. We have names like Apple, Priceline, some index products like SPY, which is an ETF that tracks the S&P 500. We have IWM, ETF that's tracking the Russell. We have Amazon, you have the Silver ETF, JP Morgan, and XLE, which is an energy ETF. So it's a good starting place. If you're looking for names to trade, use this as a starting point. Pull them up, start to track them. I think you're going to be pretty impressed with the types of movement back and forth that we see on these names. Okay, so once you have a shortened list of names that you want to look into, you want to do some testing. Okay, the list that I just gave you, I don't want you guys to take that and start trading some of those names, right out of the box. You have to do some initial testing. What I'm looking for here is, depending on the system that you're using, in my case I'm using the PTU systems, I want to go back in time. I want to find stats like my winning percentage, what's my average losing streak, do I have losing streaks in some of these names? Can I expect 3 to 4 losers in a row? It's very important to know that. What's my overall profit? My average holding time for options traders is huge. It really helps in picking the specific options that you're going to trade. And then finally, money management methods. You want to get a feel for how this stock moves. On Apple, for example, not uncommon to see a $20 move in just a couple of days on Apple. Well, that's really important to know when you start to manage the trade, based on the profile that you're looking to go for, how does that stack up to how Apple moves historically? It's really important to pay attention to that in your testing. So number one, you want to make sure you're documenting the trades so that you can gather the stats. And then once you have some of that testing done, you're going to want to go in and create a trade plan based off the test results. Any type of decision that I make, whether it be managing a trade or placing a trade altogether, I have to back up that decision based on stats. Okay, if I can't back up my decision based on stats, then it's probably not a decision I should be making. Okay, this slide right here, this is what gets me most excited about trading options. This is just a glimpse of my daily routine. The power here is that it doesn't take much time to do this. Okay, when Mark was talking about trading small windows of time and trading no more than an hour or two on a day trading basis, well, I can show you a way to trade options where you're coming in literally less than 10 minutes a day. Okay, a lot of times there's nothing to do when we come in. We're not actively trading. We're looking for swing trades. We're looking for the very best moves. So we're really just taking what Mark talked about with the day trading, and we're just simplifying it. So the way I start out my day, I like to come in before the open. Okay, could you come in after the close the day before? You could. There's so much that can go on overnight. I really like to come in before the market opens at 9:30. What I do when I come in, I want to scan each chart, start to take some notes. Do I have any new setups? If I'm in any new setups, do I need to adjust targets or stops? Do I need to set any price alerts for myself? Document all that so I can go into the session with a plan of attack. Once I have that done, I may stick around right after the open if I have some trades that I want to initiate, or if I need to make any adjustments. I can come in for a few minutes right after the open, and then I'm just periodically checking in throughout the day. Okay, I list here coming in at lunch or sometime in the afternoon before the close. When I do this, literally it's a 30 to 60 second look at the charts. Okay, just to make sure, okay, am I approaching any key levels? Am I approaching a target or a stop? I can do this very quickly. Not looking at sitting down for an hour to look over all my charts in detail. It's just not necessary. A big part in the morning is setting those price alerts. The price alerts are what allow me to break away from the computer, move on with my day, or just to do some of the day trading on a different screen. So what I do is I like to set those price alerts either in my broker platform or in a mobile platform on your cell phone. So a lot of brokers offer those mobile platforms. So once your price levels are hit, if you're approaching a target, you set a price level for yourself. If I get that alert sent to me, I know I got to get in. I got to check that trade. Okay, getting away from the screen throughout the day, that's what prevents us from over trading and over managing the trades. What I find is if I sit down for an extended period of time and I'm looking at the charts, I might start to see things that aren't necessarily there. If I'm in a trade and I'm starting to approach a target, price action is starting to slow down, we're starting to pull back a little bit, my emotions are going to take over and say, maybe I should get out of that trade. I want to protect as much profit as I can, instead of letting the system work for me. Okay, letting the system play out according to my trade plan. So getting away from the screen, letting those trades work out, it's a great way to just really simplify things. Okay, so let me bring up a chart of Apple, because I want to walk through this trade that I just closed out here this morning. Okay, this is one of the PTU systems that you heard Mark talking about here earlier. The power of the PTU systems, it does a lot of the hard lifting for us. Okay, if I'm looking at Apple here, the PTU systems give me my entry point, my targets, and my stop. Okay, all that's done for me, so that leaves me to focus on the specific strategy that I'm going to use to play this setup. Now, could you buy the shares of stock here and just play it using the stock? Absolutely. Not a problem doing that. The only problem I have with that is it does tie up a lot of capital. So for those of you with a smaller account size, can you put on a sizable position on a $600 stock like Apple? Probably not. So what I'm going to show you is a way to use the options. You can go ahead and purchase a call option, control 100 shares of Apple stock for as little as $1,000, $2,000. That leverage there is incredible. So this is a setup. It triggered in on the 30th, so it triggered in on Monday. Very straightforward, long setup. Okay, we had plenty of time to get our order in. System gave me an entry point, 596.33. Okay, it was a little awkward initially. I didn't really like getting in right in front of that 600 level, but I didn't want to make a $4 adjustment either. So I went ahead, just went with that setup at 596.33. My first target here, that was at 606.55. My second target was at 613.19. Now typically on Apple, my average holding time is anywhere from 3 to 5 days. Here lately, these trades have been moving very quickly. A lot of times hitting target in 24 to 48 hours. And this is a perfect example of that because we triggered in Monday. Instead of buying the shares of stock, I went ahead and I purchased the August 590 call. I bought that for $12.55. So my total cost on there was right around $1,255. You can tack on a little bit there for commission. What that did is it gave me control of 100 shares of Apple stock at $590 per share. In this case, I knew where my targets were at. I came in yesterday. We actually hit the first target yesterday. I like to trade multiple contracts. It allows me to scale out of the position as I go into profit. So in this case, I sold my first position, half of my position. I sold it for $23.70. Okay, gave me over $1,100 of profit, and that's basically overnight. Okay, really nice move on Apple. So just taking a look at that half position there, pretty nice return. Show me a market that you can go ahead and do that on in 24 hours or less with $1,200 of capital committed. Okay, what I did is I came in this morning, I carried half of my position on, trying to go for that extended target. And we came in this morning, hit it pretty quickly, sold out the remainder portion of the position. Okay, and that is actually a mistake because I sold it out for $28. Okay, so another really nice profit over on Apple. On a two-position approach, I'm looking at total profit of $2,600. So for two contracts, I'm basically, I'm committing $2,500 worth of capital, and to see a $2,600 return in essentially 48 hours, that's just incredible. And here's where it gets fun. My total amount of time committed to this trade, placing it and managing it, less than 15 minutes. Okay, you kind of work those numbers in your head. What kind of hourly rate is that? I mean, that's just an amazing return. And some of you might be saying, well, yeah, it's a great trade. That's you just kind of picked a nice winner there. Well, I can tell you that Apple, going back to the beginning of the year, we're seeing over a 70% win rate. That watch list that I gave you guys earlier, on a lot of those names, we're seeing win rates in between 65 and 80%. When you're seeing that type of win rate combined with these types of percentage returns, this is where it gets fun to trade. Okay, so I don't care whether you're trading futures or Forex currently, you might be totally new to trading. You really you can't ignore these types of numbers. You have to be able to consider branching out, maybe looking into something that you don't really know much about at this point. I can show you how to trade options very easily. All right, so that's just it's a perfect example. Just close out this trade this morning. So I just really wanted to show it to you. It was just an exciting trade for me. And we see those trades all the time. So I love it. All right, so part of the PTU program, which Mark is going to talk about more here in a bit, some of you might be saying, okay, yeah, that looks exciting. I don't really understand a lot of what you said there, call options and put options. What we do with the PTU system is part of the university. We offer different types of specialized training, and it's basically, we call them a major program, similar to what you do in college. And inside of this options major, we're going to break it down into great detail. Everything that I talked about today, it's going to be talked about in great detail. We'll talk about setting up a watch list. We'll talk about what to look for when you do your testing. The trade on Apple that I just showed you, I'll give you 14 to 16 names. of different stocks that we're seeing those types of results on a consistent basis. Now that call option that I just talked about on Apple, how did I know to pick that specific option? Well, I'll walk you through step by step the criteria that we look for that really helps pinpoint which option to play. And then I know I had to move very quickly through that trade example, but we'll just, in the training, we'll go through example after example to really pound those points home, really, so you can take the system, be comfortable with it, and really run and see those types of results for yourself. All right, so hopefully that helped give you a preview of options. Hopefully I've kind of piqued your interest there. I really hope to see a number of you in the next round of training. I look forward to working with many of you. So at this point, Mark, that is all I have. I will throw it back over to you.
Great. Thank you, Mike. Really appreciate that. Great presentation as always. Really fascinating stuff. I wrote down a couple notes as you were going through that. And one of the things that I wrote down was when you showed that Apple trade with the calls, you were controlling 100 shares of basically movement. You're kind of renting that stock. Well, that's $60,000 of value of that stock for, I think it was about $1,255. So again, people always think, oh, stocks, there's not enough leverage. I'm going to need 60 grand to trade 100 shares. So you're showing us literally how to have 47-to-1 leverage, how to have a completely controlled risk because we know exactly what our max loss is going to be, and certainly it's nowhere near, right, 60,000. It's just the contract value. And in that case, really, I think in a lot of ways, turns the stock and ETF opportunity to be just as good as a leveraged opportunity as futures, and certainly just as good as Forex. And I think that's why a lot of times people feel that it's not, because they make the assumption you need just a massive amount of capital to be able to control, obviously that size position. So really cool stuff, really exciting stuff. It's why we wanted to present it to a lot of people, because I know about 30-40% of you are doing some stock and options. But a lot of people have just seen most of the marketing in the industry over the last few years, and a lot of it has been about the Forex opportunity. And it's not to say that there's not opportunity there, but I'm hoping that we open some people's eyes to really where other opportunities are. So the third topic I wanted to present today was, I think, really critical, and that's treating trading as a business. And so I want to give you a little presentation here on this. There's some really neat things in here. I do have to give credit. One of my coaches, Will Feibel, really put this together, and he was nice enough to let me obviously present this information, because when we've presented this in our trainings, it's been really eye-opening for a lot of people. So again, thanks to Will, but I think you guys are going to really get some good stuff out of this. So some of the first things you have to do is you need to decide, what can I trade? I'm sure most of you, as we present to you a lot of opportunities here in a lot of markets and futures, we've talked about Forex, and Mike's just talked about this amazing world of stocks and options. You have to start to make some decisions on what you can trade. And one of the first things you need to take into account, of course, is the size of the risk and reward. You also have to take into account the winning streaks, and yes, this is about honesty here and full disclosure, the losing streaks. You also need to understand how much money, capital, margin, depending upon what you're trading, is required. What account size based upon what you personally can tolerate. One guy may be very comfortable with a drawdown of 10% or even 20%. I could talk to somebody else who literally panics at 5%, and somebody else who doesn't even blink at 40%. Not that that's necessarily good, but there's huge variance in everybody's individual trading personality. So one of the things you have to always do is understand the risk on every trade. You have to look at history. Yes, history does repeat itself in trading. It doesn't repeat itself perfectly. You can't expect to do exactly what happened in the past is going to mirror itself in the future, but there's nothing better to kind of tell you what could potentially go wrong on the risk side and what you should plan for going forward than looking at historicals. And one of the key numbers that we tell you to look at is the average loss per trade. Now again, I want to stop for one moment and realize that here I am as a trading university, a system developer, somebody who markets in this business, and I am talking about, oh my God, losses. Because again, we are trying to treat this as a profession, be upfront with you, and if you want to succeed, we can't just talk about everything good that can happen in trading. Trading is amazing. The opportunities are incredible, but you have to be balanced and you really have to look at both sides of it. And that also includes what's the maximum loss. Because again, if you will learn our systems, go through the training, and you understand the risk, you're going to make it. If I don't get you convinced on this part, you're not, despite the fact that the training was awesome, despite the fact that the system is great, despite the fact like you can have trades like Mike showed you. Unfortunately, if you don't acknowledge this part of it, I can't get you to the point where you're making money. Statistical deviations, the head starts to spin a little bit, but again, all it is just understanding that there's variance, right, based upon averages. There's outliers, okay, based upon averages. So this is an important chart to understand what's going on here. And some of you have seen this before from us. If you haven't, I really want to point out a few things. And really the heart and soul of most good strategies is this win ratio. It's just not realistic to expect 80% or higher. I know there's systems out there that build themselves that way, and over some length of time, they may achieve 80%, 90%. It's never over a real length of time. It just doesn't happen. I can go into all the math why it won't hold up, but I have found over the years, and we've been doing this a long time, this is the bread and butter. That's 65 to 70%. Psychologically it works for most people, and also the numbers work for most people. Now, what this is telling you, though, is that you have a 100% chance of losing 3 times in a row on a losing streak. Not every time you take trades, but, you know, things don't always go your way. Markets are not always generous. You have a 10% chance of losing 5 to 7 times in a row. So, granted, that's a pretty small probability. And you know what? With PTU, a lot of our losses are partial. So it may not be 5 to 7 full losses in a row, but strictly mechanical, mathematical, we should prepare for this. Even the 1% probability, very unlikely, 7 to 9. Don't you think if you prepared yourself and set your account up to the right size for this, that when you lost 1, 2, 3 times in a row, you'd be like, no big deal, because you know what? I'm prepared for this, and my normal little losing streak when things are going bad is 3, yet I'm prepared for 3 times that. This is one of the secrets to succeeding in trading. You will make it if you account for this and you make yourself comfortable for this and you have the account size that can handle this. It's so huge. And we can go down, you can see on lower winning percentages, the streaks that you have. There are strategies out there that win 40% of the time and do amazing. What I have a problem with is I haven't been able to get a lot of people psychologically to handle maybe losing a bunch of times in a row to eventually get that big winner. So that's why I found the 65 to 70% seems to be really kind of the golden level. Now, wins and losses come in clusters. There's the dream time, where it just seems like, every trade's working great. You may have a bunch of winners, but you know what? They get mixed. Winners, losers, and I found that it really tends to cycle. Mike brought it up, like on one market, crude oil, where it was so generous, so easy. It goes through those stretches, but you have to know as a trader, if that happens, it's going to be a little bit more challenging for a few days, a week, whatever the case, 2 weeks, and then it's going to get easier again. This is how things cycle, because sometimes they get ridiculously hot. Like, on here, the euphoria. Hey, I can't miss. Every trade's green. I'm a genius. This is the holy grail. Forget what Mark said before. This is the holy grail. And then this happens, right? And you go on a bender, a losing trade bender, and the world is coming to an end, in your opinion. It will come to an end if you don't prepare for this potential eventuality. It should not almost ever look like this, but you know what? If you're prepared for the worst case, how much more calm will you be when you have a loser or 2 losers? No big deal. A lot of people present to you and say, look at the equity curve. They don't even show you that. All they show you is this. 45 grand. Love it. What they don't show you is the ride, a little bit of an adventure that you have to go on. It can't always be hot. It's not always easy. Sometimes it's easy. Sometimes it's not. But you know what? Every single time with our systems and strategies I found where it gets difficult, it always gets hot. It always gets hot. And I fully expect to be hitting new equity highs all along the process. But it's not all about the final number. Get that out of your head as much as you can. You'll get there. But you have to realize it's made up of clusters of winners and losers. Now, how do you calculate drawdowns? All you have to do is take the loss per trade times the length of a losing streak. Here's some examples. If you had a 65% win rate, we've already told you there's a 100% chance of losing 3 times in a row, correct? So we just prepare. $200 I lose per trade. I'm going to lose 3 times. 600 in the bag, going to happen. 10% chance I could lose up to 7 times in a row. Now again, we're not going to lose max loss, but prepare for it. Why not prepare for the trading world coming to an end? My drawdown could be this: if I lost literally 7 times in a row, full loss. 1% probability says 9. What if I prepared for that 1% probability? That's what you should do. That's the smartest thing to do. The most aggressive trader is going to do this. Well, probably not. You're not going to prepare for any losses. You're going to use the 50-to-1 leverage the broker gives you and not prepare for any loss. But if you do this and prepare for the max loss, you're going to be better than 9 out of 10 traders, I guarantee you. Don't underfund your brokerage account. Psychologically alone, if you don't underfund, you're going to stay with it. You're going to stick with it. Now, there are margin requirements that brokers also have. Okay, they're going to have different margin in futures, for example. They're going to say if you day trade, we want you to have at least this much in your account. If you hold overnight, they're going to require you to hold more money. They're also going to have what's called a minimum account margin. The good news is, you see all these? Really, if you follow our formulas, none of them matter, because I will always have more than what the broker requires. I will always have more in my account per contract than the overnight initial, and certainly more than the overnight maintenance, and definitely more than the day trading margins. And you can find smaller day trading margins than these. This is from a very conservative broker, Interactive Brokers. I've seen lower than this. But you don't need to trade this way. You don't want to trade an S&P Mini with $1,750. Could you? Yes. The problem is your drawdown percentages are going to be way too high. You may not make it. You're going to have margin calls the moment you start trading. That's no fun. Now, if you do the initial overnight, you know what? You may actually never have a margin call. If things go pretty good for you, this may literally be all you need. I told you $5,000 before, remember? And here I am showing you that the brokers are saying, sorry, that's horrible writing. That's how my writing is in real life, by the way. Much, much lower than 5K. But we want you to have enough to be able to endure the good stuff and the bad stuff, treating this as a business, right? If you have a business, not every day do you make great sales. The same with trading. So why does margin matter? You cannot trade without sufficient margin. Your account has to be large enough to maintain margin equity after drawdowns. So here's some examples. Crude oil, that's CL by the way, crude oil futures. The broker has said you need $7,000 initially in your account to start executing those trades. Now they'll require you, you only have to have a fraction of that once you execute the initial trade. Again, remember we said 100% probability, 10%, 1%. So initial margin $7,000, we're already looking at this formula and saying, you know what, I need a little bit more. I want to be able to endure these 9 losses in a row, worst possible case, and still be in business. You know what, if I drew down $1,800, I would just be back to my initial margin requirement, no margin call. I understand if I got to a 10th loss, we may have to put a little bit of money into the account, but that's 10 losses in a row that we have prepped for, and it's not that much more capital overall. Again, you do just this, and you're going to be so much better than almost every other trader out there. Now, the reason that we show you this is there's a second factor that factors into this. The drawdown percentages that I showed you, if you lost a bunch of times in a row, they can be getting up there. They can get into the 20-25% range. What you have to understand is if you draw down 25%, if you make 25%, you're not back to even. You need to make 33% to get back to even. What I find on Forex traders a lot is they're really treating it like a casino and a gamble, and they're comfortable drawing down 50% because you use all that leverage the broker gave you, because if you do, you know what, you can double your account overnight. It happens. It happens all the time in Forex when people first start out. Every single one of those same people wipe themselves out soon thereafter. Because the second you start to draw down 50% just to get back to even, you need to 100% gain. That starts to get really challenging. I'm here to tell you the only way you come back 100%, 150% is you start using huge risk and leverage. And you know where that leads to? off this chart, and it means your account is gone. You're going to the bank to wire some more money in. You know you've done it, some of you, and this is why we really also want to focus on drawdown. Okay, not just the margin required and not just the additional money we want you to have in your account. We want you to understand that drawdown percentages do matter. And you know, markets change. You know, Mike mentioned it. Markets go through cycles. Clusters come in clusters. It's just the way it is. We can't control it. There's Murphy's Law. Things go wrong. A platform goes down. Your internet goes down. Some flaw happens. You can't be flawless in what you do. It's really important. A lot of you identified this 1 out of 5 saying psychology. It's huge. If you do not have enough money in the account, you're going to have problems and you're going to start to break all of your rules because you're going to panic. And then there's lifestyle needs. You know, I'm going to show you here at the end of this part of the presentation a way that you can start to calculate where you can start taking money out of your account, growing your account, and actually taking an income. Because I'm not a believer in leaving all your money in your broker for a lot of reasons, some of the reasons that you've seen in the news. So we do want to turn this into something where we're able to draw capital out of that account every month, but you can't do it too soon. You know, lifestyle needs, just to expand on that, region of the world, time zone of the world, your job, your commitments, your risk aversion, all these things, again, factor in beyond which account or which market and which margin or which, I should say, market you end up trading. So enough about all this number stuff. Let's talk about trading. So how big of an account do I need? This is the way you should do it. Make sure you have enough to cover the margin plus that worst case drawdown. In addition, you want to have a short recovery from drawdown. So how do you do that part? How do you make this psychologically acceptable? If you control your risk to that 2%, you're going to come back. If you lost 9 times in a row and you set up your account the way I showed you and you risk 2%, you know how big your drawdown would be? You guys know. 18%, it's not that big. I can tell you every leading mutual fund that's out there that in their best year makes 10 or 15% has drawn down 18%. So these are big funds trading stocks with no leverage, all buy and hold. Even they draw down that percentage. So, you know, here's a situation where worst case with a hell of a lot more leverage than they use and a lot more percentage, you know, possible return, and you can control that leverage or that drawdown with very minimal risk, you know, just the 2%, or even if it's down to 1%, you can have a single-digit drawdown. Now, the question is, can you go higher? Yes. I mean, I realize that it's going to be tough for some people to risk 1% with $5,000. You're going to be limited by the markets you can choose from. It's doable, but you're kind of boxed in a little bit. So I realize in the beginning some people are going to have to go for that 3% risk. Just realize you've put yourself in a little bit more of a situation where in the worst possible outcome, you know, you're going to be worse off, right? It's just the way, if you lose 9 times in a row, that's 27% versus 18. Just prepare for that. Know that's a possibility. Make sure you have enough margin to cover that. So minimum account size, the best bet is to do the greater of the margin plus the drawdown or the risk per trade that you'll know on your trade plan divided by the maximum risk percentage. So if you took $200 and you knew that you wanted to risk 2% maximum, that's going to be $10,000. Well, you might do the first calculation, margin plus drawdown, and it might tell you only need $6,000. The smartest, the best, the safest, the calmest is going to be using the greater of either one. That's the safest formula overall. So here's a quick example. Russell E. Mini, let's just say the maximum risk was $300. We have plans where it's half that, but I'm going to go for the more, you know, the bigger plan. So the margin required isn't much, $37.50, you know, 1% potential drawdown risk of all those trades in a row, 9 in a row. So you would need $64.50 to cover the drawdown, worst case, and the margin. And you can definitely start there. Now, if you wanted to risk just 2% and you wanted to risk up to $300 in the max, not the average, that's $15,000. So we know between $64.50 and $15,000 is kind of where we should be. The most conservative of all, and the safest is always going to be the 15. By far the most aggressive is going to be $64.50. But once again, even if you came in at $64.50, I'm here to tell you, you're going to be smarter than 9 out of 10 traders who start, because almost everybody starts at $37.50. So you're so much smarter just using probably maybe the minimum of this formula. And anywhere in between from 64.50 to 15, you're going to be so much better off. And you know what? If that's too rich for your blood, as they say, focus then on a trade plan that does not have risk maximum of $300. What if you focused on a plan that we have that is $150 or $200? Now that $15,000 in the most conservative of setups can become $7,500. Okay, it could become half of that. Should you go down to $3,200 here? No, of course not. But all of a sudden, you can see how you can trade at that $5,000 level, that $6,000 level. So if it's too high, just use smaller risk profile trade plans. You can literally cut this in half. So what we put together here for you was a single contract. On this chart is U.S. equity and some interest rate futures using some of the active trader plans. Well, these are actually from our active swing trader, so bigger profile. Okay, so you can see the ranges. Remember, 15,000 at 2% risk, 1% risk, 30,000 per contract, and you can see the range here, as low as 7,000, as high as 15. If you went to 3% risk, well, you can cut all these numbers in half, but your risk is going to be higher. Your profile is going to be higher. What I would suggest you do, if these are just too high for you in a 2% max risk, focus on some of our other trade plans that we call active trader. Instead of active swing trader, we have plans called active trader that literally go for targets that are about half the size and stops that are half the size. So all of a sudden, my S&P Mini becomes very manageable, right? Could be close to 5,000, or my Russell E Mini 7,500, or my NASDAQ under 5,000 even. But I still suggest you have the 5 minimum. You can see the treasuries here, the 30-year bond and the 10-year. So again, there's always a way to find something that's going to work for you. Crude oil, with the big plan that we have, you're going to need, if the 2% risk, to understand up to 15,000. Now, if you're willing to have a larger drawdown, possibly worst case scenario, absolutely you can have less. If you're willing to have that 3% risk, again, you can cut that in half. But we're trying to get you guys to sort of be thinking about having the best possible chance of long-term success. Foreign exchange, it works the same way. If you had 21 pips on average loss and you wanted to get all the way down to 2% risk, $2,800 for a mini, that would count for everything. 9 losses in a row, 2% max risk, less than 20% drawdown. You'd be golden. You might be thinking, wait a minute, my broker will let me trade a mini for $1,000 or even for $100. That's all fine. Your broker lets you do what they want to do, but it's not smart trading. Can you do for less than $2,800? Absolutely. Just have to realize you're going to be tweaking the numbers. You're going to have to accept a little higher max risk, or you're just going to have to assume, that 1% chance of 9 in a row, it's so unlikely to happen. And, it clearly is. Let's be honest. It's very unlikely that that's going to be the first thing that can happen to you. So you could take a little bit more and get more aggressive and say, I'm going to focus on the 10% max, which is the 5 or 6 in a row. And these numbers would literally get chopped in half. But again, I'm always a believer, as much as you can capitalize. As close as you can get to this ideal number, get to it. Even if you come up short, but you're close or within range and you factor this in, again, you're going to blow away most traders. You're going to know so much more than most people who start to trade. And it's same with the Euro stocks, the DAX futures, the Euro bond, the Euro bobble. That's all things you see here. Some of the ranges overall based upon these best ideal situations. And then you just tweak the numbers based upon what you can afford, what you're personally willing to risk. All of us are a little bit different. We have sort of, different things we can handle. So trading as a business, this is what, kind of what I call playtime, because it gets really fun when you treat it this way. You determine what you're going to trade. Then you actually start to treat this like a real P&L, and you see how you can actually make money and start to take money out and, go past your initial funding and plan for capital. This is the fun stuff. And let me show you something. I'm going to go to a spreadsheet. Hopefully this comes up on your screen. And this is when we like to have a lot of fun, because let's just say my starting capital was $20,000. Let's even drop it down. We'll say $15,000. And I realize some of you that'll be $5,000. Some of you in Forex it'll be even smaller. But it doesn't matter. The point is to kind of demonstrate something here. And let's say we've looked at the historicals, and we've found out that the average contract, all wins and losses, is $75. Meaning, who knows? Maybe on a winner it makes $300, but on the loser it loses $300, and you've got a certain percentage that win or lose. The average is $75. Very, very, actually quite a bit lower than some of the plans that are double this. But just trying to show you how powerful this can be. Let's say you also realize, in the market you're trading, there's going to be a maximum number of contracts you can trade before maybe slippage and execution and things the big guys have to deal with. Now, 10 contracts on most markets shouldn't be a big deal. And you already, again, look at the history or the trade plan, and you know that the max risk on that one is $225. You've already said, you know what, I'm going to risk no more than 2%. Now, these additional numbers here are some requirements that basically what we say is we'd like to start withdrawing money starting at $1,000 a month and eventually get to $10,000 a month to, let's say, replace our income. And your numbers will be different. Everybody's got different requirements. The other things here are we don't want to too quickly pull money out. So what I'm saying here is, you know what, don't pull money out until I get to, let's say, $25,000, because I don't want to immediately start to pull money out. And then this is like a benchmark that I have to get another 10,000, another 10,000 before I start to amp up the money. But what's fun about this, you can change all this, but you can see, you have expenses in this business. There's charting and brokerage fees. There might be data fees. You might have some kind of web subscriptions that you use, internet service, and supply. So, in a given month, what we're saying here is maybe we have $575 in expenses in our business. And if we traded one contract, we ended up with $1,500 based upon this win rate and some averages that we use per day. And I end up with $925 in profit that month, okay? Very, very conservative, right? Now notice how the number of contracts that I trade stays the same, stays the same, stays the same, and then all of a sudden it starts to ramp up to 2 contracts because it's waiting for me, in this case, to have enough capital to keep that risk at 2%. If I change that to 3%, you notice how quickly the contracts go to 2. Literally the second full month, I jump up to 2 contracts because I now have enough money in my account to be able to handle that. Now, if I go to 2.5%, maybe somewhere in between. By 6 months in or 5 months in, I'm starting to double, then triple, then quadruple what I'm doing. Look at my trading income. It starts off nice and slow and steady, and then what happens? It starts to really take off because my expenses don't grow, right? Your expenses don't grow. So I start to get a real multiple here that kicks in, and by the time I'm up what I required, which is $25,000 in August, the 8th month in, I'm starting to take money out of my account. $2,000, $3,000, $4,000, $5,000, $6,000. So as the months grow, we're patient with this. We're not trying to get rich quick on the first month, January 1st, or let's call it August 1st here. We're not looking to get rich quick, but look at how much this grows if you'll just give it the time. And this is clearly conservative. This is crazy numbers. This is a good starting account. It's modest risk. It's modest everything. And ultimately trading income over the 4-year stretch here, 661.5, capital that you now have in your account, the income that you've taken out. Taking a look at the equity curve, what you're looking at here is the stair step is actually the contracts that you're trading. And literally by the 2nd year, we're at the max, and we keep it at 10 for a variety of reasons. Your capital just continues to grow, and all the while your account is growing, you are taking money out of this account. All right, that is where the power of compounding and trading really kicks in. It doesn't kick in on the first few months. It just doesn't. You have to let yourself grow as the account gets bigger. We can go down to 1% risk, and will the account grow over time? It will, but you know what? We're probably going to have to, at 225 risk, maybe we have to focus on a plan that has some smaller, average, risk overall. And you can see here, we pretty quickly get up to this number of contracts, but I never get too much further. So what's the reason for that? Well, the reason for that is because my starting capital, and I'm risking so little in this case, this may not be the perfect approach. That's why I say in the beginning, I may need to risk a little bit more. I may need to find a plan that has a little bit higher average, per contract. I might need to limit when I take my money out. Maybe I need to kind of, bring this up a little bit further. But all these numbers can be tweaked, and the same result happens. Over time, you will amp up. At the same time, I can't pick something that's going to average too little. $15 per trade, I'm really never going to be able to grow my account. It's just not going to happen. I have too many costs that are going to wipe that out. So it's not all about the, the upside, the golden side. You have to account for everything. This is all what we get into when we're determining what to trade, what markets to trade, time of day, day trading, swing trading, futures, Forex, options, and we're turning this into a business. We're trying to get out of the mindset that this isn't a business, that this is gambling, that this is just kind of seat of the pants. It's not at all. This is serious, serious stuff. So let's move into what Premier Trader University is all about. So this is all about having great trading systems, but that's not enough. You have got to have all the education. You know, we've spent with you so far about 90 minutes here. I mean, we have just dumped a ton of knowledge on you, I realize, and hopefully you guys are taking some notes and got some good, tips in here. But you can see why we're so high on the education side of it, because we know that's going to be the difference. That's going to enable you and turn you into what we call a lifestyle trader. And this is somebody who has the balance. You're able to achieve the standard of living that you want, but you also have the lifestyle that you're after. One or the other is not good enough, in my opinion. And it could be alternate income, it could be full-time, you might want just financial emergency money, whatever your objectives, we want to make sure there's a plan and an approach and markets and a strategy for you. So the way that it works, it's really simple. When you enroll in the university, the first step is we take you through prerequisites. Just like any college, I need to make sure you've got all the basics down. One of the cool things at the end here in the USB that you'll all receive is we're going to get you some of these prereqs down. We're going to make sure you've got some of that training, because it's really important to know all of this. Most people do not succeed in trading. We have come up with the path, I'm hoping what you're seeing, as you can see in this presentation, that takes people to success. The second step is the undergraduate portion of the training, and the third step is what we've been calling the major. So let's talk about those a little bit. The prereq is done in a home study format, just like you are now, nice and easy, nice and comfortable, self-paced, plenty of time to go over it, but you need to go over it. The undergraduate we do in this way, where we do live in the market training. We actually teach all the systems, and I'm going to blow people away when we get to the undergraduate, because I will teach you the systems in 2 hours. And really, that's me kind of probably going in more detail than needs to be, we go into. Everything else, we focus on all the other things that matter in you turning into a profitable trader. And then the major is what we do after the undergraduate. After you've gotten your feet wet a little bit, you start to focus in on a specific major, which I'll talk about in a moment. So the prereqs, like I said, great material, own pace, you work through it, you do everything on the prereq to be ready for the first undergraduate class. So in this presentation today, I had those of you who are trading full-time, and I had people who are literally just getting started. The prereq is the great balancer. For some of you, you're going to know good portions of the prereq. For others of you, you're going to know none of it. That's fine. You go at your own pace. You go through what you need to go through, and you'll have the perfect understanding when you come in of the best markets, the style, working with brokers, working with charting, working with platforms. These are all things you need to know. They can be daunting. They can be overwhelming, but we've gotten rid of all the fluff, all of the BS, all the things you don't need to know. You can buy at Amazon 500 different books on technical analysis. You can have tens of thousands of pages. I'm telling you, you don't need to know 98% of it. Not that it's not interesting, not that it can't be, good to learn, but we boil it down to just what you need to know to be effective in your trading. Risk, trade psychology, money management. These are all things I need to get you on the same page, and that's all part of the prereqs. Then you move into the undergraduate. This is where the fun stuff really happens. You've done a little bit of the prep, and now you attend the 2-day online training, live in the markets. This is all about learning the Premier Trader University systems. You've got to have a great system or set of systems like Mike showed you. If you don't know where to get in, if you don't know where to get out, well, you're going to have a problem, right? But if you can get to the point where you've got all that, you're going to be in great shape. You're going to have access to all 4 PTU active trader strategies, in-depth training on all the strategies, all about trade management, key levels, art of trading, chart levels, and it makes a huge difference. You cannot trade mechanically. I'm here to tell you 100% mechanical does not work. 90% mechanical works, but I've got to teach you that other 10%. That is really, really important. These are other things that we'll cover in the undergrad. It's just chock full of everything you need to be able to leave the undergrad and start trading with the PTU and the PTU way of doing things. And then, of course, it's all about practice thereafter. And you can choose day trading, you can choose swing trading, Maybe I convinced you to do futures day trading. Maybe Mike convinced you to do options swing trading. Maybe you want to do Forex swing trading or even Forex day trading. That's fine. We're going to try to give you all the information, all the data, all the guidance, and try to steer you in the right direction. Then you're going to move into the majors. This is where you're going to pick futures or Forex or stock and options because it's important to specialize. It doesn't mean you need to stay in any one of those boxes forever, but it's really important when you're trying to really make money that you have focus. Scattershot approaches do not work. Specialized and intensive class taught specifically in an individual market class is what works. Focus on Forex if that's what you're into initially. Focus on futures, or like Mike showed you, you don't need, you want to learn specifically about options. That should be your focus. Don't pollute it all, right? Trying to also figure out how to trade the S&P Mini at the same time. So this is all about having the strategy and the trade plans in the market you're going to focus on. All the things that impact your set of markets because they are different. Forex doesn't trade the same way that the futures trades and vice versa. Obviously the real beginner overview, advanced techniques, access to our great trade plans. Mike told you in the stock and options he's got 14 to 16. In futures we have about the same number. In Forex we also have about a dozen. These are really where we give you everything specific. We say Euro US dollar, trade at this time, trade with this approach, with these settings, go. And we give you all the training to execute upon those plans. When we have a new plan that comes out, you get the plan. When we improve a plan and make it better, you get that plan. That's everything you need. That's like being given a business plan. It's almost like buying a franchise with everything in place for you. You just execute upon that plan. And we'll just kind of make sure, and we'll do everything we can to make sure that you execute and do everything properly. Futures, you've got a whole world of opportunities available to you. That's just some of what you can trade if you go that route. Forex traders, again, you've got a lot of great choices, but not every pair. We're going to keep you off of some pairs and onto the ones that really work the best. And like Mike said, there's tons of options in stocks and options, but he's really great about boiling it down. He gave you an amazing list that you could literally probably spend the next 5 years on. There's probably going to be very little change. 1 or 2 of those will drop out, and a few more will come in, and you could literally just focus on that and be set. The same with futures. I mean, we've been trading some of these markets for years. If one drops off, if one loses some volatility, there's always something else to replace it. You're going to have the training. You're going to have the systems. It's never going to be a problem going forward in the future for you as the markets evolve. In the third presentation that I took from Will there, he mentioned that very specifically that there's Murphy's Law and markets change. You cannot be trained in just one market and one market alone because eventually something's going to shift in there. Now, I already talked about the 4 systems. You've seen some of the shots. You've seen some of the different things, but let me just tell you quite specifically, one of the greatest things about PTU is when you learn these systems, they work across futures, across Forex, across stocks. So there's not constant learning of a brand new system every time you decide to add something new into your trading business. That means that once you master the strategies, and they are not difficult, let me tell you, you'll actually be able to adapt yourself and be enabled to add markets and add different markets altogether, and to go from a day trader to a swing trader, or combine the two, or vice versa. One of the real powers of the PTU, for sure. So the next class, we've already done 2 undergraduates. We have 2 graduating classes already. Third class is coming up this month. It starts on August 21st. If you're not around August 21st and 22nd, I should remind you, no big deal. We record and archive everything. We have plenty of people who sometimes can't attend the entire live part of the training. It's never an issue. Maybe the time of the day or night isn't great for you. It's never an issue. The prereq, the moment you enroll, you're going to start right away. Okay, and you have, which is cool because you guys are good timing, 3 weeks here. The undergraduate class begins August 21st, and then we get into the majors. We have about 2 weeks in between because we want you guys to get in there, to attend the live trainings, to place some trades, and then by that time you're going to know, hey, you know what, I want to be Forex, I want to be futures, I want to be options. And we don't want you to make that decision too soon because you really need to see everything first to make the decision that's best for you. So timing is great because it's coming up. Like I always tell people, literally in 30 days or less, you're up and running. What's really cool about this is we have multiple platforms that we work on and run on. We work on TradeStation. We also work on NinjaTrader. If you decide to go the TradeStation route, we also have a program where you can get the entire tuition that we're going to talk about in a moment fully reimbursed by TradeStation. So keep that in the back of your mind if, number one, you're not on a platform, or two, you want to get onto a platform, which is all the charting and where you'll install the system. This is a great option. It may not be perfect for everybody. You may want to be on NinjaTrader. That's got some great advantages. But I like to tell people, literally, you can get the entire tuition rebated back to you just by using a platform that, you have to use. You have to be on a platform. You have to be able to make the trades. So keep this in mind, that the scholarship is available to everybody who enrolls if you go down this direction. In addition, to be one of the first 10 to enroll, we do this each time. We've done the last 2 classes. Only the first 10 get invited to a Premier Trader University Mastermind. And this is an exclusive. You literally cannot buy yourself into this. The purpose is to reinforce the growth and success. You literally will have myself, Brian, Mike, Ron, Will working with you to take you through all this, treating this like a business. And we hold this mastermind in this very small group and give you all this information. It's a reward for you making the decision to enroll, to get started, to get underway. But we have to limit it because there's no sense having 150 people in there. We just can't work with people the way we want to work with them in the way a classic mastermind is modeled. And like I said, after the fact, people come to us and go, I want in. How much is it? There is no price because you cannot get in unless you, you go ahead and you enroll in the first 10. So recap of what you get, the home study course, and this is dollar value, by the way. So just so you know, it's not going to cost you this, but you have to look at the value overall. The multi-day undergraduate program, $2,000. The market major of your choice, $1,297. And this is just based upon where the general educational business is in our industry. The strategies, it probably understates it. I mean, literally understates it. I've recorded a couple videos the last 2 days where I've shown people me making $2,000 yesterday, $2,000 today. The opportunities are there. They're there every single day potentially. The Student Owners Club, the library, the forum, live in the market trading room. We do live in the market training. We do it a couple times a week. So this is not about just sending you some CDs and you're on your own. That's just where we get started. Group coaching calls, Q&A session. I feel the best customer and technical support in the business. The TradeStation offer we've already talked about, and the potential to get it all reimbursed so that the net dollar value could be zero. It's a great value overall, $16,000. Most competition out there that has this type of university training, they tend to run about $10,000 because they're giving you roughly 60% off to come up with that dollar amount. The neat thing about PTU, we've been doing this the first 2 classes. This may be the last time we do it this way. Tuition all-inclusive, $39.97. If you own one of our day trading courses, we take an additional $1,000 off that, $29.97. If you own one of our swing trading courses instead, we take $500 off, and it's $34.97. That's everything all-inclusive. No ongoing, no licensing. It's all the live, it's all the systems, it's all the training, it's all the education, it's all the trade plans. It's a major of your choice, everything. All you have to do to enroll to secure your position August 21st, start immediately with the prereq, literally today if you want, is netpicks.com/enroll. Also, be one of the first 10 to get into the mastermind. So to make it easier on you, we also, at that page, we'll have a, a payment plan available to you. You can do a one pay and then have 3 monthly payments, no matter what, even with the family discounts, even with the swing trading family discounts. That's available to you as well at the enrollment page. So my advice to you, you've seen a lot, you've seen just the kind of education we can give you, and this is all inclusive. The whole idea behind PTU was not just system, but systems. Not just focusing on maybe just day trading, but day trading and swing trading. Not just focusing on Forex, but actually Forex, futures, and options, all inclusive. In addition, having live training, having recorded training, have live in the market training, and presenting all the trade plans, which are the specific business plans. So literally A to Z, we wanted to make sure that everything is covered and have that ongoing support. Again, those people already in the PTU, they know. We're with them every week. We're with them in the Owners Club literally every day with new content. We're answering questions all the time. This is a true interactive experience. You've seen from the education here today, this is how you're going to succeed in trading. It's not going to come from an automated system, from a robot, from anything plug and play. But it is going to come from putting in some time and going down the right path. We've been doing this for 17 years. We know what the right path is. Now, a couple extra things, and I also want to show you how to get the reward, obviously, for working with us and sitting through this today. Number one, we are going to have a more detailed demo and information session on August 9th, so a little bit over a week from now. Just go to netpicks.com/PTU. So if you enroll today, come to this session because I'm going to be able to go in more detail on the trading system itself, show you the market, show you some trading, show you some results. If you're still a little bit on the fence, I hope you're not, but if you are, this would probably be a very good session for you to attend as well. So netpicks.com/PTU. I would say enroll, get started, and then definitely attend this live session. One, it's going to get you excited to what's to come on August 21st. Two, you may have already gone through a little bit of the prerequisites, so you're already in a position to start sort of absorbing what we're going to be teaching. But everybody's invited to this webinar regardless at 12 o'clock New York time. I realize it's not always the best time for everybody, but we'll keep it to an hour or less and really take you through the system and let you give us a Q&A at that time. Now, ready to get the USB flash drive. We want to send this to you. It's got great education on it, some great resources. It's also got storage that you can use it on your system. So the way that you do this, and I really appreciate you guys sticking with us for the 2 hours. I almost don't think we have to do this because I think Mike, myself, I think our presentations, we really did a pretty huge brain dump here. We shared a lot of things with you that we don't typically share. I think, hopefully you've gotten a lot out of it, but get the reward, take it. netpicks.com/PTU-USB. You need to go ahead and put in your address, and we will ship it to you. Please allow time for delivery. In the U.S., obviously it'll be the fastest. In Canada, if we're sending it to you and you're in the U.K. or Australia, it takes a little bit longer. It goes by first class, international mail. It could be 1 to 2 weeks. Typically is pretty quick overall. But go to netpicks.com/PTU-USB, sign up, and get this. I mean, like I said, it's not just a thumb drive. There's really great stuff on it. There's demos of PTU. There's literally some prerequisite training. It's got a lot of good stuff on it. You're going to learn, and you're also going to get a nice little reward and a nice little prize for attending and listening in today. We really do appreciate you guys taking the time with us. Let me put back up the enrollment link, and I will go back. I know I need to put up some of the other links again if you didn't get those. So, in fact, what I'll do here in the chat right now is, number one, I'm going to go ahead and give you the enrollment link. So netpicks.com/enroll. So you guys should see that on your screen or in the little chat box. The next one is, I'm going to type it in right now, so give me 1 sec, is going to be to get your USB, netpicks.com/PTU-USB. So there you should see that link. And to attend the webinar on August 9th, the last link you need is http://netpicks.com/PTU. Okay, I think I've got all the links out to you correctly. Let's go ahead and answer some questions. Brian, if you could jump back on the mic, hopefully you're still with me, and I don't know if I can start looking at the questions, or if there's any that you wanted me to answer first before any others that we should be answering.
Yeah, and before we start this process, let me say again, I've been answering a lot of questions throughout the last 2 hours. If your question is missed in this process, so if you would just please simply retype it. So, and then if you have any open question at this point, go ahead and get that into us, and we'll stick it out here until we've answered all questions and everybody's happy. So, Mark, one of the questions that I was going to bring up with you was a gentleman from Europe who was wondering what a tick chart is. So
chart.
You would refer to tick chart in one of your presentation slides.
Sure. I can tell you with PTU, we're not even using tick charts at this point. It is another way to visually represent what's happening in price action on the chart. And all it is every time there's a trade in a market, there's a tick. It's kind of like if a market trades at 100, tick. If it trades at 101, tick. If it trades at 102, tick. So what a tick chart does is you might have a chart that says don't create a bar until there's 10 ticks, meaning 10 trades. And so that's all it is. And the cool thing about a tick chart, as opposed to a time interval, which is I was trying to say, was when there's lots of trading going on, you're going to get a lot of bars. That's what you want. You want a system that's going to be reacting quickly when there's a lot of trades. When the market's kind of dead, dull, today is the FOMC meeting, okay? It's been pretty dead and dull. I can guarantee you on a tick chart there's been a lot fewer bars being created because everybody's waiting for the Fed to make their announcement. You know, Fed days tend not to be great days to trade stock indices. I typically don't recommend it. And even Forex. They can be fine days to trade energies and the metals. They seem to kind of behave normal no matter what the day. But typically stock indices and the Forex, you should wait till the next day or trade after the Fed announces. Usually there's some really nice trades. And that's actually coming up here pretty quickly. So anyway, that's what that is.
Thanks, Mark. Nando is asking if we can repeat the price for the 3 learning phases. So the price for PTU, can you go over that again, Mark?
Well, all inclusive, it's right here on the screen. If you, I don't know if he was asking on payment plan, you can see what it is here. Start at $19.97 and 3 pay at $9.47. Or if you qualify and you own one of our courses, you can see the additional discount here, $500 to $1,000, which is pretty awesome overall. And then, of course, you can do a 1 pay as well, you know, which you'll have that option on the page. I'll have to kind of scroll up. This will be the 1 pay. Just get it done, and you're done. You're done for life. That's it. You've got the PT. You've got everything. You've got your major of choice, and you're set at that point.
Okay. We've had a number of questions on whether or not the presentation slides will be available, and I'm going to tell you that yes, they will be available. We'll make that available along with the recording, along with the spreadsheet that Mark referenced in his presentation, and we will be sending that out in a follow-up email. So you'll want to be looking for that in the next 24 to 48 hours. We'll process the video from today and get that out to you.
Yeah, great. Thank you, Brian. I mean, I always encourage people, you know, ask your questions here. We've got you live. If we don't answer, ask them when you need to. We've had the first 2 classes have gone great with the PTU. The training actually was even easier than we expected. Getting people up to speed on the systems has really been pretty much a piece of cake. You know, and that's been the cool thing. We are spending a lot of time on what we call art of trading and chart level adjustments and key level adjustments. I realize for some of you that doesn't make any sense, and others of you, you're like, yeah, I know what you're talking about. It makes a big difference. I mean, I recorded a video today where I had some real decisions to make. I had to, 1, take into account the FOMC meeting. Number 2, I had a couple situations where I had to take into account some things that I saw on the chart. I went ahead and explained it. I showed people how I did it. I traded it live. And, you know, those are the kind of things that end up being priceless for people. They're the things that will make the difference, literally, between success and failure. I think a lot of what we covered today in the beginning on trying to steer you down the right path of what market or markets to choose, I think you're going to be a lot better off following a lot of that guidance. You know, if you open yourself up to the options opportunity that Mike showed you, you're going to be in great shape. If you follow the 3rd presentation and really take our advice on margin and capitalizing and position sizing and drawdowns, I mean, you don't know how much better off you're going to be than most of the people that we deal with initially. Do you want me to keep looking at questions here, Brian, or do you have some more you want me to answer?
No, I'm just actually kind of looking through what I'm going to respond to directly versus what I'm going to bring up here. One individual saying he's having trouble bringing the link up. I know that we've had many people bringing the link up without a problem, so just make sure you've keyed it in properly and maybe even cut and paste it out of the link that Mark sent to you. Again, that was on the PTU-USB link.
Yeah, and it should be in the, the little chat box. It tends to be clickable in there as well. It has to be lowercase. It is case sensitive. It has to have that hyphen. You know, it's these URLs can be picky. They have to be exactly as written.
And Mark, need to let you know that we are at 9 at this point, so the bonus is going to be going away after the next person signs up.
Yeah, I mean, those always go quickly. I mean, you know, how often do you get an opportunity to work, you know, a small group with myself, with Brian, with Will, with TJ, with Ron, with Mike? I mean, it's just one of those kind of special opportunities, so that's why we limit it, but, you know, we like to do it. It's also fun for us to work with people. I see a question here from Larry talking about a 5K account, markets to start with. I think hopefully we I think that was earlier. I showed you a lot of the opportunities there, but absolutely options trading, you could start there. You wouldn't typically want to start with stock trading. That wouldn't be enough capital, Larry. Forex, you can definitely start both on the day or swing trading side. And futures, absolutely, though you wouldn't trade every possible trade plan. For instance, in crude oil futures, we have 2 trade plans. One you could trade, one you could not. The DAX futures, you wouldn't trade at all at 5K. You'll wait until your account grows. Dow E-mini futures, absolutely. Russell E-mini, you probably want to wait till the account's a little bigger, or go for our active trader plan where you can get by at the 5K. So the cool thing about having a fixed risk capital is it kind of helps you limit your choices. In the beginning, people do get a little overwhelmed with the choices, but we really try to spend a lot of time guiding you through that. The other thing I try to remind people of, it's no big deal if you change your mind. It's no big deal if you change the market you're trading. Change. I mean, nobody's fixed, and you're not going to have a strategy with PTU where, oh no, if I go from Russell E-mini and I want to change the euro US dollar, I got to buy something else. I got to start all over. I got to relearn everything. You don't at all. That's one of the great things about it. Also, let me put some contact info up in case anybody was having any issues. I wanted to give you this as well. If you want a lot of examples of the system in recent days and weeks, if you go to PremierTraderUniversity.com and you go there and find the blog, and honestly I don't know what you click. Maybe if Kevin, if you're listening, let me know what they click. He posts on a regular basis screenshots, recent trades, all that good stuff, so you can really start to familiarize yourself a little bit with some of what we do and how we trade.
Yeah, Mark, let me give you that link real quick. If they go to PremierTraderUniversity.com, we have a free lessons tab, and there's a link for articles. And under that, we've got updates occurring, many a week across the various markets of actual screenshots of trades, results, etc.
Great, thank you, Kevin. So wanted to kind of share that with you guys as well. I see a question from JJ. What % are those withdrawals? I think you're talking about when I was doing playtime and having some fun with the, well, in that case, it was with the spreadsheet. Those withdrawals, percentages, we set up some benchmarks. We basically say we are not going to take out any money until we reach a certain account size. That enables us, if you remember on the spreadsheet, it talked a little bit about, capital preservation first, growing your account second, income third. So it takes all that into account. It'll then start taking money out when it enables you to grow your account, preserve your capital, and that's the way why we do it that way. I know some people who too quickly try to take money out of their account, they deplete themselves, and they miss out on the opportunity to have that massive scale. Don't cheat yourself in the beginning by doing that. That's why I tell people in the beginning, put that money in and expect to have to grow it for a little while before you start to get into the situation where you start taking money out. Because where you're really going to do very well is when you start to scale up with additional contracts. Mike showed you how he doubled his results by buying 2 options contracts. Did it take him twice the time to buy 2 options contracts? No. It took him 0 additional times. How many businesses do you know where you can double your business and put forth 0 additional effort? You just have to be margin and capitalized properly to grow. That was the idea behind the spreadsheet. Let's see. Brian was saying, can you show Mike's list again? I can probably find it in the presentation here. Let me see if I can quickly find it for you, and I'll put it up. Give me a sec. I got a page up quite a bit. Brian, is there anything else you want to answer while I'm finding this?
Yeah, let me take a look here. Just this as a message from Jerry says, Mark and Mike, thanks for the information today. And looks like he's going to be joining us in a month or two. So thanks, Jerry. Awesome. We appreciate you taking the time to be with us today. And James asking a question, if a copy of the spreadsheet is available. And again, I mentioned this earlier, we'll be sending that out in a follow-up email with the link for the recording so that you can review that also. So that'll be coming in the next day or 2 days. Paul's asking about the TradeStation scholarship. Let me let you know on that again, how that works. And it does require that you set up a new TradeStation account. And the really cool thing is if you fund a futures account, if you fund a Forex, if you fund a stock and options account, you will be reimbursed the commission, 20% of the commission, once you start live trading. And that goes until the cost of the course, the PTU course, has been reached. So it's a great way to get started and then know that down the road your investment is going to get paid back. And so that's how that works. There was also a question of an existing TradeStation person wanting to know if they have to open up a new TradeStation account, and the answer to that is yes. Unfortunately, you do have to fund a new account.
Great, thanks, Brian. I also see kind of similar vein question from Darius. Does your system work on AMI broker? You can trade at any broker you want to trade at. I don't care where you put your account. Put it somewhere safely, somewhere you're comfortable with. That's all great. But you will need to chart on either TradeStation's platform or NinjaTrader's platform. There's certainly no requirement that you trade at any one broker or another. We'll certainly be more than happy to talk to you, guide you a little bit on some of the choices where a lot of our people are trading. But if you want, of course, the scholarship on TradeStation, you'll want to trade there. If you can't trade there or don't want to, that's fine too. But you'll still want to chart on there or on NinjaTrader, and then you'll be in great shape. Let's see. Leonard says, I have Keltner bells. What do I do at this point? Leonard, that's perfectly fine. I think actually a lot of what we taught you today should help you a little bit with Keltner bells. That's purely Forex swing trading. So you may use PTU to discover and learn how to swing trade options. You may use it to learn how to day trade futures. You may use it to have additional choices in swing trading Forex. I mean, it can very much be complementary to what you're currently doing, as long as you're able to learn something new and put some time into something new. We've got plenty of people who approach this in a complementary way, where they realize, the more choices I have available to me, the better. The easier it is to kind of fit my account, my lifestyle, my place in the world. It can definitely work. Just don't combine the systems. Don't let the signals mix. That's one thing I always have to stress for people. Let me see. John says, when are the system software available for trading the TF? So in the case of PTU, when we release the trading systems is with the undergraduate training. So in this case, it's this month here, August 21st. When you come in on that day, you've gone through all the prereqs. We do the training, all the training, literally on the first day. On the strategy, you download the indicators, the workspaces, everything. You get some sample trade plans. So all that happens very quickly. Luke says, can one skip all the materials already day trading given my situation? I think maybe you're talking about the prereq. Certainly, if you have experience in various areas, you can go more quickly, and you don't have to spend all the time on all components, Luke, of the prerequisites. But at the same time, we tell people at least try to go through it a little bit, because there may be some things in there that are still new to you that could really help you out. Leonard, talking about been trading for, as you can see, Leonard would be great. You've been trading a long time. You've had some health issues. Look, this is my recommendation to anybody in that situation. One, how do you handle stress, right? If you're going to be day trading, there's just no getting around it. There's some stress. No matter how calm, cool, and collected you can be, there is some stress. I've been trading forever. I am pretty calm overall compared to how I used to be, which back in the 90s was a disaster. But still, I still feel it a little bit. You may want to consider more swing trading, because like Mike showed you, like you could do on Forex, one of the great things about swing trading is you don't have to stare at it. With day trading, you don't have to stare at every tick, but you kind of have to be very engaged. So it is definitely a lot less stress if you swing trade. Let's see, Ekal was saying, you mentioned trading is 90% mechanical, 10% discretionary, which I like to actually call art of trading. You mentioned ODST being 100% mechanical. It is, but even ODST can very much benefit by key level adjustments. Obviously, we tried to keep that very, very simple and a simplified approach, but can you do better with art of trading? Absolutely. I am confident that in every single trade plan that I have for PTU, that can be profitable mechanical, I can beat every single one with my 10% art of trading over any stretch of time. That's what we like to teach you. That's what we like to show you. Al says you have a great training program. Just wondering if you provide trade alerts like entry and exit. Does everyone have to go through the prereq? You don't have to go through the prereq, though I would still tell you go over the topics, start some of the videos up. If you feel like you've got it, you can fast forward, you can skip, but I don't think anybody's going to be able to skip the entire thing. There's going to be a few important things in the prerequisites, Al, that you're going to want to go over. But look, we're all adults. It's ultimately going to be your choice. I'm not going to test you. I'm not going to quiz you. I am going to expect you in the undergraduate to be prepared, and it's only fair for everybody else. That's why we have that, because we don't want one person not to be prepared, and then it slows down the entire thing for the other 98% who are prepared. So that's all I ask you on that. We don't do this whole alert thing, though. Once you set up your platform, you can set up alerts like Mike showed you. Like even on day trading, we can set up alerts if that's what we want to do. So that's something that you can do. And you can attend 1 or 2 times a week live in the market as well. Lee says, how often do we do these programs? We've done the undergraduate in June. We did it once in July, once in August. The next one after that will probably be later in September. So we've been trying for monthly, but I'm not sure that we're going to be able to always maintain that pace. So if you don't hit it in August, there should be another opportunity in September or October. I think the timing now is really fantastic. Most of you know, starting September through the end of the year tends to be one of the best times to trade. And there's this little old thing called the U.S. election that's happening in November. It's going to be crazy. There's going to be volatility, I'm sure of it, kind of out of the whatever. And we love volatility. We thrive on volatility. So I'm like, oh, bring it. The more volatility, the more uncertainty, the better. So at any rate, I think it's going to be a good time, and we've seen it before historically. What do I think of trading the S&P only? I think it's perfectly fine. I think it's got great volumes, amazing liquidity, tremendous scale. You could trade 10 contracts in a heartbeat. However, I will tell most people, if you're beginner to intermediate, it is a harder market to execute on exit, not on entry. Entry is pretty darn easy. In fact, you don't rarely get any slippage. You could go market order, piece of cake, and only get a tick of slippage. Worst case, most cases. Where it becomes more challenging is on exit, it only does 4 ticks per point. So there tends to be tons of volume on the bid and the ask. And so you are going to be competing against a lot of people. If your limit order, let's say the market, make this easy. You need to get to 1,200, and that's your target. And it hits 1,200. You're not ever in any market guaranteed to fill. But in the S&P Mini, you really may or may not get that fill. You're guaranteed to get the fill when it hits 1,200.25. And you know what? It should, right, in most cases, but it doesn't always. So what do you do if it doesn't? That's where the art of trading comes in. As much as everybody wants to be mechanical, and on the chart it looks like it hit target, we've got to teach you how to react and handle that situation. It's more challenging because most of the other markets, they don't always fill right when they hit that 1,200, but the Russell, Crude, the DAX are more likely to fill and fill quickly. It's not guaranteed, but the percentages are higher. You don't have to wait as long as you do with the S&P. So like anything, there's some pros and there's some cons. Let's see. S is saying, Scarb, can you give a couple of examples of how you simplify technical analysis, chart patterns? Yes. The way that the PTU system works is there is one indicator that we call the signal line. There's another indicator called sentiment. Sentiment is bullish, sentiment is bearish. There's another indicator that is what we call our trade calculator that takes into account the signal line, the sentiment, and where price is at a given moment, and plots an exact entry price, targets, and stops. That's the 90%, all done for you on the chart. Our job is everything else we talked about: risk, position sizing, trade execution, actually placing the trade correctly, placing the order correctly, getting the stops and limits in, and then applying whatever art of trading we need to apply. So rather than having in your platform, like when you download TradeStation, you'll have, I don't know, 200 different indicators they'll give you. We're not going to use any of them. Our approach is strictly price-driven, and the real secret is the range bars that we use, the dynamic formula we put into effect, focusing on the hot trade zones and ignoring the dead trade zones, and having very specific plan with the sentiment and when to also go against the sentiment depending upon situation. So these are all things that we do, but that's how we simplify compared to what you could do with RSI and stochastics and moving averages and exponentials. I mean, it goes on and on and on. You can overanalyze any market to death. We're all very much driven by price action. Kirby's asking, did times change on the mini S&P and Russell for trading? I thought the start time 9:03. Yeah, I mean, Kirby, you're talking very specific to the exact trade plans. When I gave, for instance, I said, in this market, this is the range. We may start, like 1, 2, 3, 4 minutes later for our reasons, but that's something that we obviously go into in these specific PTU trade plans. Okay, so just kind of be aware of that. Joe asks, for options, can the trades be set up to be made automatically when the stock price reaches the entry, or do I need to watch the price myself until the entry is reached, kind of like a conditional order? Mike, I'm not sure. Assuming you're still with us here. If you are, is that one that you can potentially tackle for me if you're on the mic, if you're still around?
Yeah, sure thing. You can definitely set up conditional orders. Now, depending on who your broker is, it can, sometimes it can be a little difficult depending on your broker. You can definitely set conditional orders to enter into a position if the stock price hits a certain level. I always put it this way, I don't like to do that personally. I like to set price alerts for myself and then go in and manually place that trade. I just want to be in complete control of that position. I just want to make sure I get a fill. I want to know where I'm getting in at. So that's just my view on it personally, but you can definitely set conditional orders, not a problem.
Another quick question, Mike. Somebody asking about binary options. I don't know if you want to give any quick opinion on that.
I really don't have much of an opinion on it at this point because I haven't done much with them myself. I know it's a product that it's a newer product that's trying to gain some traction. I have never traded them, so I can't really give you firsthand experience. But at this point, I just stick with the regular monthly and weekly options.
Great, thank you, Mike. Appreciate that. Let's see, Mona, let me see if there's a question. I've been sim trading the Ron's Dowie mini morning session trade plan for 9 weeks, keeping track in our UTA, which is our ultimate trade analyzer, and about ready to go live. I've had one losing day. I've had losing day, but not one losing week, and a total of 714 net points. Hey, that's awesome, Mona, so that's great. And the Dowie mini is a nice plan because you don't need the large account. It's, it's futures, it's $5 per point. Again, it's very much in control on the plan. You always kind of know what you're looking at, and certainly that's the kind of consistency you're looking for. And even though you haven't had one, it wouldn't bother me at all if there's a losing week along the way, as long as you kind of follow presentation 3, or when you attended the major when Will did it, I make sure you've got the proper account size. It won't even phase you when eventually that happens, but that's great. Glad to hear that. As a requirement on day 1 to have TradeStation or Ninja, it's not on day 1. Going. So I would definitely say that you'd want to do that. Is the program repeatable and no further charge for life? Yeah, I mean, if somebody wanted to reattend an undergraduate, reattend the major you chose, there would be no problem with that.
Hey, Mark.
Mm-hmm.
We
Yes.
Lost your response to that last question. Could you repeat it, please?
Yeah, I thought that may have happened because I noticed my a little internet blip. Is the program repeatable? Yeah, we have no problem. If you want to come back to a future undergrad and you already took it, absolutely. If you want to take your major again, absolutely. I mean, no problem. You don't have to pay us for that. We're more than happy. I mean, we're such big believers in education. I'm never going to stand in your way of coming back in and redoing or taking something again or listening to it again. So definitely. How long are the courses available to revisit after I register? The Owners Club, the neat thing about what we're doing now, which is going to change in the future, is we're not charging you ongoing for the Owners Club. We typically do. So you'll be able to access that SG really anytime. So it's going to be available for you. Everything is archived. That's another neat thing that we do. Already in the Owners Club, there is so much great training, walkthroughs, snapshots. There's live training. We record the live training. There's trade plans, new trade plans. I'm in there proactively answering questions. Mike's in there. Brian's in there. Ron's in there. Will's in there. So, I mean, we're all over it. So, I mean, that's one of the neat things you guys will be able to inherit with this. Connie, what software systems will you get for trading? You're literally going to have the 4 main PTU trading systems that work in futures, Forex, and stock and options. Now, there are certain plans that work better in certain markets. We're going to say, hey, in the Russell E-mini, this is what works best. In the pound US or the euro US, this is what works best. Mike's going to say, if you want to trade Apple, this is what works best. So we wanted to have multiple systems that are all different but similar. They're all going to be very familiar once you learn one. Each one's going to be very similar. But the importance of that is because we realize markets don't all act the same. They just don't. They have different behaviors. That's why I can't say, oh, every market starts at 8 o'clock and everyone ends at 9 o'clock, because you know what? Some are going to be much better at 2 o'clock than they are, let's say, at 8 o'clock. The bonus from SG, of course, that's the mastermind, so that's being part of that small group. I think we talked about that. Mike, see you on the 9th. Sounds good. Is a 3K account okay for trading? That's from Cameron. Yes, I think for 3K you're going to have to probably focus more on Forex because of the ability to use minis, and minis you can definitely use at 3K. Could you trade futures? Like, could you trade one of the smaller plans like on the Dow? You could. My only concern there is if for some reason bad luck hits, or you in the beginning make a lot of mistakes, you don't do enough practice. If you hit into a little losing streak, could you potentially have a margin call? You might. So that's my concern on futures, even though physically your broker might allow you to do it. So I would steer you more towards Forex, or just grow the account, or try to put together some more capital, and once you have that, then do it at that time. Brian, I'm going to keep doing questions, but I'll stop for a moment in case there's anything that you wanted to jump in on.
Yeah, just keep working through it. I'm answering a lot of these in text, and so you can feel free to repeat those as you read them, or I think most of them are good to go. So
great.
We're getting down to the end here, so if you have questions, do get them into us.
R Black, what is the cost to change majors? So you get a major. If you add a second major, it's $997. It's not mandatory to do that. You will actually have training in all of the disciplines, so you will have plans immediately in the undergrad for Forex, futures, and stock, just if you really want to specialize. And I tell people, don't feel rushed to do that. You don't need to start doing that in September. If you want to take a major down the road, we hold those on a regular basis. So just do it when you're ready. Alan says, I've traded a few years, been in the markets investing for 290. I'm not sure what 290 means. Sorry, Alan. How do I know what is in each level to know where I should start? Well, I think the nice thing about PTU is we've made this actually quite simple. There's prereq, there's undergrad, and there's major. That's your path. That's the path that you follow. The biggest choices you're going to have during that process is ultimately what you're going to want to start to trade. Oh, I see, Alan, you said 290 equals 20. Get it. So you have a lot of experience. But that's the path we're going to take you on. I've tried to really make it like a funnel, if you can visualize that, or maybe a tunnel. I know there's so many options. I'm trying to get people in the beginning to where you have lots of options to kind of come down that funnel, come out the other side, and you'll know exactly what you're doing. Hope that makes sense. I hope that's a visual that works for you. So let's see from Jerry. Mark and Mike, thanks for the training. The price seems very reasonable. Looks like you're going to have a job situation mid-September. Let's see. What are your chances of opening up your special class for the first 10 people who sign up? Okay, so yeah, so in the future, so Jerry, if the timing isn't right for you in August, we typically have been trying to make this opportunity available. So, hopefully when you're ready, whether it's September, October, whatever, when we have it next time, we'll have something like that available. I can't guarantee it 100%, but we do try to do something like that. So sorry, it took me a moment to read the question. TradeStation Scholarship, I think we got in there. John Z, yeah, that sounds great. Michael, I can't give away that part of the ATR percentage. That's a little bit of the secret sauce. I really gave you a lot in here. I'd love to almost give you everything, but I tried to share a lot, but I don't want to go overshare at this point. That's something that took me a long time to figure out, and it was such a huge difference maker for me. I just probably just shouldn't blurt it out. Do you also teach to trade E-minis? Of course. E-minis is the Russell, the S&P, the Dow. Those are all E-mini futures. So certainly if you go down the futures track, Al, that'll be something you'll have. Justin, you started on ODST. So far, so good. So good. That's, it's definitely a good way to start seeing how we think about price action and that sort of thing. So Justin, appreciate the comment there. I trade now with IB, but I have a TradeStation account too. Do I have to activate TradeStation again? IB, I love, great broker. I trade there as well, like you do. What you're going to want to do if you want the scholarship, yes, fund the account and make some trades there at TradeStation because they're going to be reimbursing you the tuition. I mean, why not? You're going to get the same executions you get at IB. But if for some reason you don't want to do that, you want to stick with the IB funded account, that's fine too. You'll just have to, you potentially have a platform charge that TradeStation is going to have. Okay, let's see what else we've got here. How do you know if your broker is safe? Wow, that's a loaded question. That's a good question. You're definitely, yeah, there's been some things in the news. This is my advice to people. I actually had this conversation with somebody that I played tennis with yesterday who's a trader, and we actually talked a lot about the PFG situation. And he's treated it the same way as I have all the time. Do not leave more money in your account than you need to leave. They give you margin, they give you leverage. That's one of the reasons why we show people taking money out of the accounts. There is regulation. It's supposed to protect you, and just realize there is protection on accounts. There is, like in the U.S., and again, you may be in a different country. You're going to have to check with your authorities. We do have protection in our accounts up to a certain limit. If you go over those limits, that tends to be where your risk can potentially come in, but you may need to wait a while. That's the thing. If a broker runs into some crazy problem and commits fraud, it's not as if you can hit a button and withdraw that money tomorrow. You many times have to wait. So, you need to be as careful as you can be, but you're right. I mean, there's never perfect 100% disclosure, but I always encourage people, don't keep extra money in your brokerage account. It's just like banks. A lot of people split their balances over a number of banks because of the insurance limits that the government provides. Brokers do very much the same thing. There is protection up to a certain amount, but it's not always going to be immediately liquid. So, keep as little in there as you can, but obviously as you scale, you're going to have more money in there, but hopefully that's all kind of coming from the profits. Alan, yeah, this I'll answer for Mike real quickly. Obviously, volatility We're not going to cover, actually, in your question, options in any real detail in the undergraduate portion. That's going to really be part of the major. So while we'll talk about stocks in the undergraduate, the detail on options will not come until the major training with Mike. Jasper says, please explain again the breakdown of the list of prices in more detail. Well, the good news about the way we're doing this is, I'll put it up here on the screen, this is it. So I don't have to really break it down. It's all inclusive. Other than the discount, you get the family discount. So it's systems, training, support, trade plans, one major, the ability to Q&A with us whenever you need to, the ongoing owners club. There is no monthly. There's no licensing. Again, I think that's all going to change, and maybe it changes in September. I'm not sure yet. We've been talking about it. But for right now, at the moment, this is all in, all inclusive. So for me, that makes it easy to explain. So hopefully, Jasper, that takes care of it for you. Does swing trading require more margin than intraday? It would. We don't really do. We don't really have recommendations to swing trade futures for that reason. Not to say we won't have some trade plans eventually. I am looking at some, but it's not my initial reflex to have you going down that route. Swing trade, I think, is better suited in options and in Forex. I do think we'll have some futures choices, but it's not going to be all the markets, and it's not going to be, you know, some of the markets you may want for that reason, because the risk is just sometimes too high. Chota says there are very few unis teaching futures. There are tons for FX. Yeah, because you know what? FX is the easy way. It's the easy thing to hype. It's the easy thing to have out there. That's kind of why you're seeing that a lot. But again, I think at NetPicks, we kind of always do things a little differently. We sort of march to our own drummer. You know, we don't sit there and interact with everybody else in our business trying to figure out every angle of Forex. I'm trying to give you, and Mike did too, good, you know, good education, good advice, even if it isn't, even if it's contrary to what you sort of wanted to hear in some cases. I'm kind of comfortable with that. Let me see what else we've got. NetPicks systems are great, especially during webinars. Okay, that's cool. So John, you hit a full target on crew. Good for you while you're listening. Even better to make money while you're sitting around listening to this. Ralph says you've got, okay, so you've got NinjaTrader and you've traded our UST. So yeah, you're set, Ralph. If you've got NinjaTrader and you're comfortable with it, you're good to go. Just go through the funnel, you know, with us. Go through the prereq, the undergrad, and the major. Jasper, hours we trade typically, well, our chat line, U.S. market hours, but you'd be surprised. Like Ron works that chat sometimes. I'm surprised. Sometimes he's on there. So definitely U.S. hours, but sometime early morning, late night. I think that's typically the case, right, Brian? I may have caught Brian off guard on that question, but he may be answering questions right now.
Yeah, that's the case. I responded to 8 to 5, I think, but you know, a lot of times we're on till midnight, like last night. So.
Are there certain brokers that, yeah, I should go back for a moment. Some people are like, what? Wait a minute, midnight? The dedication on the staff here, the team here, is kind of ridiculous. I mean, we truly are in the markets. We truly are trading. We actually care that you guys succeed. We really actually care that when you spend your money, that you have the chance to make a return, and a really good return, if you'll just follow us. Not everybody does, but if you follow what we teach. And it doesn't happen with us spending, you know, 1 hour a day. We put in ridiculous amount of time, you know, into this. And Brian's right. There's plenty of times that I, you know, go online, and I'm online at 11 o'clock at night, and, you know, he's still there, you know, working on something. So the dedication is definitely there. We're in this to help you guys succeed, and that's definitely the case across the entire coaching team. We're a bit obsessed and possessed, I guess, with trading. It's definitely an obsession for us. Bunny says, are there certain brokers you can recommend? I mean, again, I've got people in here from probably dozens of countries. Interactive brokers can be a great choice. TradeStation, to take advantage of that deal, can be a great choice. You know, certainly, are there other options? Yes. There's so many Forex brokers out there, you know, Anda, etc. My recommendation to you is don't trade anywhere. You should typically trade somewhere which is licensed in your country, which you actually have verified the licensing, which you understand how they hold your account, which you've gone online and looked for reviews. Realize every broker gets bashed. It's a game of percentages. You know, brokers get blamed, systems get blamed. What you're trying to find is make sure that it's not an overwhelming issue. Fly-by-night's not a good thing in the brokerage world, that's for sure. I'm not saying that long-term guarantees you, but clearly we've seen some examples of that, but those are things you want to look for overall. I personally have traded at Interactive Brokers for I don't know how long. I've been, nothing but satisfied. There's no personality there, but they know how to execute trades. Are there any monthly subscription fees from TradeStation? You're going to have exchange fees. That was in, remember, the spreadsheet that we had for you. So just realize you're going to have that, Johnny. So expect that. You shouldn't have any platform as long as you're placing trades. I use track and trade. No, Will, we're not compatible on that. Beware of UK. Yeah, MF Global, UK, right. I mean, look, there are issues, so you do need to be careful with where you put your money. That's always the case. Works on NinjaTrader. Yes, Stefan, definitely NinjaTrader works wonderfully. We've been working with Ninja almost since the beginning and very, very happy with them. So it's a good choice for you. They work with a lot of brokers. So you may not want to work with TradeStation for whatever reason, or you can't, or your country doesn't allow it. Ninja is the great choice because they can directly interface with a number of brokers and really do have some great data as well. All right, I'm going to end it there. I think I hit every question. I really, really apologize if I missed your question. You guys were great. You spent so much time with us here today. I hope you feel we shared a lot of great stuff with you. We really tried to give a lot here. You've got the great USB with some training in there coming as well. So you know what? That's all I've got. Thank you very much to Mike. Brian, do you have any closing comments before we let everybody else go on and start living the rest of their day?
Just great presentation, Mark. Thanks for the information you shared, and it was good. It was long, but it was good.
Excellent. Sometimes it takes a little time to get the education out there, but I think we really got a lot of great stuff into your minds. Hopefully, you guys hang up here thinking about what the opportunities are. So again, appreciate it. Appreciate the global audience too. Some of you are crazy. You did amazing. You have amazing dedication, probably more than I would even have attending on some very unusual times. But let me put up the final bit of contact info again. And thanks very much, everybody. Great trading day. Looking forward to meeting and talking to a lot of you in the live training as well at the later this month. Take care, everyone.